Thank you so much. And before you take your seats, you can appreciate that session. Thank you so much. The Equity Anthem has a way of telling you what they are doing. And before you take your seats, Brent, I would like us to just look around, look at the people around you. If anyone looks like a person who unlocks businesses, I want you to go and give them a fist. 2 or 3 people, welcome them to today's morning session. Go ahead, do that. Do that. You can tell them that you look like you unlock businesses. Thank you so much for that. Beautiful time. Asante sana. Well done. Yeah, that was enough. Thank you. Thank you so much. Now, ladies and gentlemen, just before you sit again, thank you so much. In Africa, when you tell people to say hi to 2 people, they say hi to 8. Thank you so much for that. We're going to tell the world that this is happening, that the Kenya Trade and Investment Roadshow is happening. So if you don't mind, just look around the people sitting next to you. The person with the best phone is going to be the selfie designated person. So let's take some selfies right now. Just discuss who has the iPhone 19, 20, or the Samsung, whatever. What is it now? There you go. Take a selfie right now. Take a groupie. Do that. Take a groupie if you don't mind. And by the way, if your neighbor is not smiling, you're free to walk to another. All right? Excellent. Once you've done that, you may take your seats. I appreciate you for that. Make sure you take those groupies and the selfies. Well done. That was very good. Very beautiful. Thank you so much, Zach. If I may have my slides there. Excellent. Thank you so much. Ladies and gentlemen, I appreciate you for being there. Sante Sana. This is good. This is the best. I think EQ, you need to give an award there. You know, this one is powerful. This is an international one. It looks very nice. I like that. I like that. That lady was awarded the best selfie taker. Thank you so much. You may take your seats. Asante Sana. We want you to share that this conversation is happening. If you don't mind, we have a hashtag courtesy of the media team. It is Equity Trade and Investment Roadshow. If you don't mind, you could tell the people. And I know we have representation from many countries in this house today. Let them know that you're here for the Equity Trade and Investment Roadshow. Sometimes I normally urge people, share it that you're here on your LinkedIns, on your X, whatever profiles you have. Let the people know that this is happening. Ladies and gentlemen, even as you share that, allow me to just formally welcome you here and just to say that we are looking forward to an exciting day and to have a great time as well together. And so good morning once again, distinguished guests across Africa and even around the world who are in this place. Your presence here reflects a diversity of perspectives and partnerships with the power to accelerate industrial growth and transform value chains across borders. Our shared economic future really cuts across borders and the transformation value chains as well. So we look forward as well to tell you that Kenya is no longer asking whether we can lead the continent's industrial rise, but the question is how fast can we get there? How boldly can we do that together? And in the local expertise that we have with a combination of the needed Africa's next era investments, industrial growth, we believe that you are here to help us unlock all that. So today, as we answer those questions of how can we scale, how do we attract high quality investments, how do we harness technology competitiveness, you are the leaders present today to help us unlock that. And I'm very happy as well because the representatives as well from this country, Kenya here, we have the powerhouses in the house and I can see them right here. So, ladies and gentlemen, welcome to the Equity Trade and Investment Roadshow Kenya Business Forum. Let's appreciate it with a clap. Asante sana for being here. Some quick housekeeping, if you don't mind. One is, if you don't mind, you could keep your mobile phones on silent so that at least you do not distract the rest of the sessions. We have photography happening and videography, so if you see them, just give them your best smile. You never want to be caught off guard in another way. We intend to manage time as much as possible and have a feeling today I might do something interesting to help me manage time even better. If time allows, I might do that. But please, wherever you are, once we have the break and we speak about the 15 minutes or so, kindly help us observe time. We also want to appreciate that we have the amenities in case you need to use them, how you came in and walked in. We have the amenities on your, as you exit is on your right, as you come in is on your left. So feel free to as well have that. We intend to interact a lot. In fact, we have power panels today. And so I indulge you to kindly explore discussions that will be there and give us your pointers as well. Any point that you have as well, you are more than welcome. So it's not just about listening, it's about participating to ensure that we leave out of here well informed. And I'll be telling you how we shall be doing that. And then I just want to alert you that I can see the hotel securities around. I whispered to them. I asked them, do you have any planned fire drill? They said no. So in case of such a thing that happens, exit where you see the nearest fire exits, and they will guide you to the safest places. Excellent. I look forward to an amazing day. And I've just said that we'll be interacting a lot. So if you don't mind, I have a way of doing that. I want you to type on your phone, since Wi-Fi is open and free, type on your phone that slido.com, the passcode is Kenya. Do that now. If your neighbor is still looking at me, tell them it's your phone time now. It's your phone time. Just do that, slido.com, and the passcode is Kenya. That place you'll see some polls happening. There will also be the Q&A part that I hope we can, as well as much as possible, indulge. I know there are people who don't like typing. You'll just like scanning QR codes. I'm about to give you that right away in a moment. And there you have it. That'll be my first way of checking whether we are in. Just to ask just a few people, what are you most looking forward to in today's forum? Anything that you're looking forward to. And feel free. In Kenya we say, even if it is the food, it's okay. It's all right. It's allowed. It's allowed. So feel free to share any thoughts that you have there, so that at least we can be able to interact and hear your voice on the go. Lunch. I knew there could be someone. Thank you so much for that. Someone is saying networking, learning something new, connecting with like-minded investors, networking big time, real estate investments, industry insights, finding partners. I believe this is partners for business. All right? Excellent. Someone is looking forward to meeting the CS later on. And this is very good. It's a good moment to tell you that in the afternoon, the cabinet secretary will be right here. So we're also looking forward to having that. Someone is looking forward to getting money. Okay. My sample is supposed to be 50. So far, so good. Oh, you can read them up here. Excellent. This is lovely. Thank you so much for that. Lovely. As you can see, opportunity takes the day. A lot of insights takes a second position there. Partnerships, connections, networking, a lot of that. Thank you so much for that. This is very good. So far, so good. Let me just ask you one more question here. Let's do a quick check-in. How is everybody feeling? It's good to check. How are you feeling so far? How are you feeling? When you feel yourself, how are you feeling so far? Let me see. This is quite fast. Don't overthink it. It's your personal way of doing it, all right? Let's just check very quickly. A lot of people are feeling great. Thank you so much for that. Curious, good, excellent. People who need more coffee, just to alert you, the waiters are right here. If you need to order, just ask them. They'll come straight in with even extra strong as well. In one word, what will define Africa's competitiveness in the next decade? Tell me. What do you think will define Africa's competitiveness in the next decade? One word, then I can close it at that. Let me hear your thoughts on that. It would be nice to know what you feel. Lovely. Look at that. Partnerships, regional economic integration, innovation. And by the way, when you see that bold word, it means innovation is a big thing. It's a big thing here. Thank you. The youth, excellent, lovely. Logistics, I love this. This is very good. Integrity and the likes. This is good. This is very good. This is very good. Asante sana for that. Thank you so much for your reactions. If you look at your phone, the next part of it where you're typing, there's a Q&A. I would like to ask you, even as the speakers are coming here, even as the panelists are engaging with the moderators and the likes, feel free to ask your questions there. And even though we may not be able to answer all of them, as long as you send your question there, you will get your responses today. Thank you so much for that. This is great participation. Allow me to skip the other one very fast, just to let you know that feel free. That is a part of the Q&A. Some people have gone to type in there. Some of the rest of us, don't worry, that is reserved for the Q&A. And we appreciate your moment. Thank you so much, Zach. I appreciate that moment. So ladies and gentlemen, just to start us off, and I like the energy already. I am looking forward to really just having this great session. But we want to start by the welcome and remarks. And in the house, we have a dynamic leader at the helm of Equity's operations in Kenya, guiding the institution's continued growth and impact across the nation. Ladies and gentlemen, please put your hands together for Moses Nyabanda, the Managing Director, Equity Bank Kenya. Karibu sana, sir. Welcome. Take us through. Karibu sana.
Great. Thanks a lot, Maina. Good morning. Jambo. Yeah, that was a very good energizer by Maina, and I'm really glad to see all of us here. Some faces I met at the cocktail on Wednesday. Some we are meeting for the first time, so feel very welcomed to this second and last leg of our roadshows this year. We've laid out the red carpet for you, because Kenya is the place to be. So karibuni sana for those joining us for the first time. And just reflecting on the words of the Equity Anthem, I am a member, you are a member. That's what we are going to do today. How are we going to connect businesses? Because in Equity, we believe all our customers are members. So it gives us a brilliant opportunity and a platform for us then to connect. And that's what this roadshow is all about. So feel very free to connect. I love the words on the Slido in there, who is looking to network, etc. So make the best out of it. That's why we've created this forum. So on behalf of Equity Bank Kenya, together with Equity Group, led by our CEO, who will be joining us later this afternoon, Dr. Mwangi, we're very pleased to be hosting the second leg of the roadshow. A couple of you started with us in Kigali, and it's culminating here with us in Kenya. And as we look to do that, it's a platform, and we believe no other institution offers such a platform for us to connect businesses to businesses. But it's not businesses we're actually connecting, it's the individuals in those businesses. We've organized this forum such that it provides you an opportunity to talk to people within your sector, but also those that you may have interest in. So as we interact throughout the day, this forum is to ensure that we get to do that. Because it provides us also with a great opportunity to relook at Kenya, but also Africa with a different lens. The opportunities that get presented in the course of your interaction will help you focus around what could I do differently. The innovation word that was the largest when the Slido came up is one that Kenya is well known for. So look for that opportunity to ask the people you'll interact with, how could I best get value out of that innovation? We are in Kenya today. Kenya gives you an opportunity of 55 or so million consumers. But it's not just that. Kenya has been a gateway to the wider region over time. So what we present to you today is not the 55 million Kenyans that we have, but the almost 500 million consumers within the Eastern Africa space. And Kenya has developed its trade routes. The northern corridor that we are touted for is probably one of the most active trade routes that we do have. And take full advantage of that. When we said, what are we really looking for in this forum? So I saw things like talent, youth. Kenya presents you with all that. We are, and I would brag about this, probably one of the most educated population that we do have. Geographically, Kenya well positioned. If you're looking to do something with Asia, Kenya well positioned. We are halfway across the world. If you want to get yourself to Europe, the same. The southern part of Africa, the same. So Kenya is a unique country in that it presents you not only the opportunities, but we are also uniquely placed to ensure that you can be able to conduct your business as quickly and as efficient as possible. So welcome as we get to interact today. As Equity Bank, we provide you with a further unique proposition. We have 22 million customers across Eastern Africa. What does 22 million customers mean to you? Those are connection points that you could use. And we use it deliberately and purposeful to ensure that we're able then to connect you to one of our customers. The roadshow that happened yesterday, all those are our customers. And there are 22 million more that we can expose you to. So take full advantage of this. Ask us the questions of whichever industry our customers play across board, and we provide that unique opportunity to do that. And we are widely spread across Eastern Africa, 400 branches. So there's no part that we are not touching. And that information is useful for you as an investor, as a trader, and we are exposing and happy to do that for you. As a group, we took a bold view and said, we need to figure how do we solve some of the complex problems of Africa. And we did that by creating a strategy that we call the Africa Recovery and Resilient Plan. And that strategy is all targeted towards how do we increase productivity in the continent, and how do we optimize the value out of those value chains. So today, we'll be sharing with you a little bit of that. My colleague Brent will come on stage at some point to talk about that. But that's what we are truly looking for. How do we unlock value out of these trade missions? And I'm glad that you've joined us as part of that conversation and as part of that journey. In that strategy, trade is prominent, and it's our pillar 3, because we believe by stimulating the intra-Africa trade, we have a fantastic opportunity to unlock value in there, and we can do it at scale. You've just heard the number of customers we have. We are present in 6 markets. As I've said, the Eastern Africa offers you a consumer base of 500 million consumers. So scale is important, and Equity is here to hold you to do that. So happy that you've joined us at the course of this mission. What will success look like for me at the end of this mission? And that's something that's important for us. On one scale, I hope a number of us do get to actually sign deals. So I would be very glad to hear that a couple of us actually shook hands. At the worst of it, make sure you've left with at least a dozen connections. You may not have signed a deal in this roadshow, but hopefully, at the end of it, you've made meaningful connections to your business and to your contacts, because those will translate into deals in the future. So I'm really hoping that this turns out to be a true networking session. We've designed it for that. We'll have the panel interactions, but also in the afternoon, we've set it up for people to actually move around and interact and get to know each other. So I'm really looking forward that we turn this into something truly meaningful for you. That's for today. For the medium term, what will I think success will look like for us? It's how we plug and unlock the trade within Eastern Africa and the Africa continent at wide. If we're able to do that, then it's win-win. For you as an investor, it's win-win for the population that resides within the region we are talking about. It's not just unlocking trade, but it means much more to that. There's job creation that comes with it. which is critical for this continent. So the investments that we are making is truly to transform the continent. You heard the words of our anthem in there, that equity is set up to transform lives. So when we're doing this, we believe that there's a bigger picture that will be transforming the people of Africa, not just around the job creation, but a much more sustainable business environment that we look to, but also a much more sustainable place to live in. So I really thank you for joining us this morning. I look forward for the day. I'm sure there'll be lots of interactions, as we've said, and that's what we set this to look like. And the insights. Do give us feedback at the end of today. What else would you like to see? What more could we have done? Because this is not the last roadshow that we are doing. What more exposure would you have wanted to see as we get to do this? So we are hosting this forum today here in Nairobi, but we hope that the capital that will move or will flow as a result of this trade roadshow would be impactful, because as Equity, that's what we stand for: impact to the continent and impact to our people. So thank you very much, and a warm welcome to you guys, and do enjoy the day. Thank you.
Thank you so much, Moses. Moses is the Managing Director, Equity Bank Kenya. Ladies and gentlemen, allow me as well next to invite the man who is as well the architect of the strategy propelling Equity to even greater heights, a driving force of transformation within the group. Put your hands together for Mr. Brent Malahi. A round of applause to him as he comes. Mr. Brent is the Group Chief Strategy Officer, Equity Group Holdings.
So, good morning, everyone, and thank you for joining us for this trade and investment mission. So Moses talked about connecting the dots, connecting you as business entrepreneurs to the opportunities. But maybe just to bring out the context in which we're doing this. I think if the IT team could just help move the presentation. So we're doing this in the context that the world is reshaping, global supply chains are reconfiguring, and there is a window of opportunity in which to connect you to these opportunities. There is a lot of interest. These supply chains are busy resetting, and once they set, I think they will be there for the foreseeable future. So there is a window of opportunity to look at the secular opportunities that East Africa, and which Kenya provides a gateway to interact with these opportunities. I don't know if the team has been able to. So this slide just shows you how concentrated manufacturing is globally, but also in terms of sourcing raw materials in which manufacturing takes place. Without fail, you'll notice in critical products, in critical raw materials, particularly when it comes to food security, there is a high concentration of manufacturing and production of, in this instance, in the bottom part of this presentation, agricultural produce. The point of this is that there is post-COVID, post-Ukraine, Russia, there is an appreciation that diversification is a critical consideration of the concentration and diversification that businesses need to look at. But it is also in the context that East and Central Africa is in a region that has a high concentration of high growth markets. So this slide shows you the IMF forecast for the next 5 years. And it shows you those countries with above 5% over those 5 years. And you'll see where growth is concentrated. What is also important to highlight as we help you connect to high growth markets, and yes, in our region, is that this region of East and Central Africa, and one can talk about the East African community, it is one of, if not the most integrated region in Africa. And I say this because of the infrastructure that has been put in place by our governments that connects our region, both hard and soft. There is no doubt there is opportunity to improve. As Moses mentioned, this is a high concentration of a demographic dividend in terms of the population that is importantly connected across the borders. And it is the future consumer market. Africa will have, by 2050, 1 in 4 of the world's population. And consequentially, it will have the future labor force as well. So you have the market, an integrated market. You have a high growth market. And this growth is really underpinned by demographics, infrastructure, agricultural potential. 65% of the world's unutilized arable land is in Africa, and there is a high concentration in East and Central Africa. There is also appreciation around the critical minerals, and again, a lot of that is concentrated in Africa, and again, in East and Central Africa. So you have a natural endowment when it comes to agriculture, when it comes to critical minerals, concentrated in this region. You've got demographics, you've got a level of integration, and it is no surprise why East and Central Africa has a high concentration of the fastest growing economies in the world. Busy slide, just some statistics to give you some numbers to a story. I won't go through them, but you can just see how Africa is positioned in terms of agricultural production. This will be circulated, AQ, I suppose, to the delegates. Just more statistics. But let me give you some statistics for Kenya, and I see John from Ken Investors here, and we've been working closely on an initiative around leather. Kenya has the 11th largest herd of grazing animals in the world. This is cattle, sheep, and goat in terms of number of animals. Tanzania has the 13th largest. Ethiopia has the 4th largest. The point of this is raw materials into the leather industry. We're in the process of working with the Italian government, with the Italian private sector, to essentially connect this opportunity, connect this dot to that of Italy. You'll appreciate that Italy is well renowned for its luxury leather industry. And in the room, we have a couple of businesses that operate within the livestock and leather value chain. So let's drill down into some of these dots that Moses talked about, and specifically Kenya. If you look at the construct of Kenya and why one should consider hubbing your business for East Africa, and I would think for Africa in Kenya, it is a diversified manufacturing gateway into East and Central Africa. It has an established industrial base in terms of all the infrastructure that government has put in place. This is road, power, rail, ports, and importantly, the connectivity it gives into a bigger East African community market of almost 340 million people, a GDP of $350 billion. If you put a neighbor of Ethiopia into that mix, the GDP of Ethiopia is around $120 billion and a population of around 130 million. You will appreciate from the previous slide, let me just go to that previous slide. One observation you will make, the darker the map is, the higher the growth is. 4 of the 10 fastest growing countries in the world are in Eastern Africa: Tanzania, Uganda, Rwanda, Ethiopia. 3 of those neighbor Kenya. So Kenya is a gateway to a high growth region. As I mentioned, it has an industrial base, it has a relatively diversified economy if you look at the GDP mix of the country. And you can just clearly see in terms of the trade structure of the economy how diversified Kenya is as well. It has a number of industrial clusters in the country, on the coast, in Nairobi, and further along the northern corridor that Moses mentioned. Again, more statistics. I won't go into too much detail here, but just to highlight that northern corridor, that the map, the Kenya map at the top in the middle, shows you this northern corridor, and that 78% of Kenya's GDP is produced along this corridor. Importantly, there will be diversification of this GDP over time as further corridors linking into Ethiopia that is opening up. As that is established, you'll see economic activity moving along that corridor as well. And also as trade and investment increases across the borders as well. Some more statistics specifically around Kenya. There's a number of initiatives that Equity Group is doing. The talk around trade is only viable to the extent that the local value chains within that country have been developed. So as Equity Group, we've appreciated that for the Africa Continental Free Trade Area to be successful, for the East African community to be more dynamic and vibrant, domestic value chains within a country need to develop. The level of fragmentation, the level of capacity building needs to be well considered. So as Equity Group, and we'll go through this strategic plan of ours to develop local value chains. As I mentioned, what we're doing in leather, we have a big initiative around tea, coffee. We have initiatives around critical minerals. We are looking to develop opportunities, and importantly for you as entrepreneurs, businesses, to ultimately de-risk these opportunities and also to ensure the market is set up for you as well. So think of these trade missions as just part of this connection of value chains that don't just terminate at the border, but go across borders. So when Moses talks about us connecting the dots, we are literally connecting businesses across these value chains and applying our balance sheet as a commercial bank to finance and ensure that economic activity scales up and leverages up. So I won't go through this. As I mentioned, we'll circulate this. But ultimately, this is our corporate strategy, which we call the Africa Recovery and Resilience Plan. And it's ultimately a developmental plan to ultimately develop value chains, create regional corridors, connect these African regional corridors to global supply chains. And we're doing this in a very sequential way in terms of we appreciate that there is significant natural endowments that Africa has. And that speaks to our pillar 1, taking agriculture, taking mining, improving productivity, ultimately output. Our pillar 2 is consistent with our government policies across the region to help them industrialize, drive manufacturing value addition. So take that higher output, value add it. We're a commercial bank. We have 22 million customers. We have all the dots, and we are intentionally connecting these dots. Our pillar 3, one of the activities in our pillar 3, which is around trade and investment, is this trade and investment missions that we do, including the one that we have this week. So we're taking the raw materials, improving productivity, adding value, connecting the markets and the suppliers, distributors. And ultimately, because of the nature of our markets, micro, small, medium-sized businesses is what drives our economy. So we are connecting these micro, small, medium-sized businesses to these value chains across agriculture, mining. We're connecting them into these value chains. So you can see a logical sequence playing out in how we go to the market through these value chains. Now, pillar 5 and 6 are somewhat cross-cutting. We operate in a market where we do have a lot of micro, small businesses. We have a lot of smallholder farmers. We do have a lot of marginalized segments. Our business model is set up to capacitate, de-risk, transition these segments into more structured markets. So we have a big foundation that does not do CSR. We have a foundation that does capacity building of value chains. We have a foundation that does de-risking, and importantly, taking these capacitated segments and connecting them into these value chains. And then ultimately, we will leverage off technology. So it is not coincidence or just another trade mission that we are doing today. This is a series of connections that we are making to ultimately develop value chains and trade corridors to connect them into global supply chains. So you'll continue to see these initiatives. AQ and Joy and team have dedicated desks where ultimately these desks, whether it's a European desk, it's an Asian desk, for us to develop these value chains, and it speaks to why you in this room, we need to bring in the factors of production into these value chains, the machinery, the capital, the skills, the entrepreneurs, and that's ultimately what we are looking to do as well. So we want to connect you because you have the capital, you have the entrepreneurial skills, you have the machinery in which these value chains will be developed to ultimately target the next consumer market. Thank you very much.
Thank you very much, Brent, for that session. Ladies and gentlemen, as well, in the same breath of what Equity Group Holdings is doing, I'm delighted now to introduce an astute and accomplished professionals whose leadership continues to shape Equity's commercial success and market expansion. Please help me welcome Ms. Gertrude Wamala, the Group Chief Commercial Officer. Round of applause to her as she comes. Karibu sana.
Good morning, everyone. Karibu, Kenya. It's good to see you all, and I hope that you're going to have a great day. We'll try and ensure we manage the expectations. Thank you for giving us the opportunity to say what we're looking forward to. So we've heard from Moses why Kenya. Brent has also told us about the benefits of doing business in Kenya. And I think as we go through the day, we will get more comfort about not just the opportunity, but the investment climate and how government policy is supporting us in that regard. So how can Equity help? I just want to talk about that. I would like you, as you leave this this round, this roadshow in Kenya, to think about how Equity can partner with you as a strategic commercial partner for your aspirations, not just in Kenya, but across the region. I think some of you have been to our establishments in Rwanda, some of you have been in the DRC, some of you have been in Uganda. And what that tells you is that we're able to connect you, to give you an integrated offering across the region. Why are we able to do that? Yes, we have the footprint, but we also have the balance sheet that can support your aspirations. Today, our balance sheet is just about $14 billion. We have the ability to lend to a single investor $600 million. We're able to lend you, to support you, to facilitate you using our balance sheet. And I think that's an important thing to consider. Equity Group is a universal integrated financial services offering. That means that we're able to connect you not just as a corporate entity, we're able to connect you, as Brent has mentioned, through the value chain with SMEs, with distributors, with suppliers, all the way down to the consumer. That means we understand all of those segments. And that also means that we have taken the time to understand the sectors that are of interest to you. When I look around the room, I see we've been clustered into sectors, manufacturing, agriculture, and so on. And in the room, we have our sector heads as well, the people who've taken the time to understand the opportunities deeper. They've taken the time to interact with policymakers deeper. That means that we are able to support you to navigate those opportunities. We run an integrated financial services business because we understand that investors are not just concerned about the funding. You're concerned about risk management, and that's why we have an insurance business. You're concerned about payments, platforms, and that's why we've invested in those digital channels as well. We're able to connect you through supporting with market entry. We are uniquely positioned out of the markets that we operate. In 3 of our markets, we are systemically important financial institutions. That doesn't just speak to our financial muscle, but it also speaks to our ability to support with policy, to support with regulatory interfaces, and overall to make sure that your entry into the markets that we are introducing you to is seamless, is frictionless, and ultimately delivers on your investment aspirations. We are regionally connected, and I think you've had in the presentations in the 6 former markets where we have banking businesses and insurance businesses. But we also have representation in Ethiopia. As Brent has mentioned, that market is opening up. We've been there for some time now. We're starting to get a better understanding of that market, and we certainly will be able to connect you in that regard. But we've also recently realized that the corridors are not just on the continent, but we're able to connect east, west, and that's why we've recently decided to set up a representative office in the UAE. That office, we believe, will also play a critical role in integrating your aspirations and helping you to connect with us in the East African region. Brent has mentioned our value chain approach to banking. Some of you would have looked at the 100 million number, and you probably would have said, if I could access the 100 million, that would be great. But you've probably asked yourself, how will that be done? So as Brent has mentioned, our approach is based on value chains. We operate in ecosystems. And if you partner with us, we're able to bring you alongside us into the ecosystems and to help you to tap into those opportunities as well. There is no sector that we do not understand because we play across all sectors. We're a universal bank, and so we're able to credibly work with you. We're able to apply our thought leadership to support you in that regard. We have a wide distribution network enabled by technology, as Brent has mentioned. And so when it comes to applying technology, applying innovation to how you want to do business, we understand that and we're able to support you with that. We've also partnered with like-minded institutions. We have an expansive strategic partnership base with development finance institutions and with other commercial partners across the world. That means that we're able to capacitate, we're able to de-risk, we're able to develop depth across the value chains. So even as you think about investing and you're concerned about whether the distributors will be able to support your business, whether the consumers understand the complexity of the products that you may want to bring, we're able to build that capacity at that level, at the consumption level, at the distribution level, at the supply level, to be able to support you. And so I think, as Brent has mentioned, when you look at our Equity Group Foundation, that's a hub that helps us to do the de-risking, to do the capacitation, to ensure that we leverage those partnerships to support not only the ability to consume financial services, but to help us to expand access to credit and ultimately then to be able to consume what you all are going to be bringing to the market. I think trade facilitation speaks for itself. Thank you, AQ and the team. These roadshows are really an opportunity, not just for us to tell you what we can do, but for us to introduce you to the policymakers and the other significant partners that you would work with going forward. I think finally is around impact. Many of you in the room, you want to do business, you want to succeed in business, but you want to have impact as well. Equity is uniquely positioned to support you with that because we're not just an economic engine, we're also a social engine focused on the impact that we can have, but crucially also from a sustainability perspective. Over the years, we have developed a compelling sustainability platform that we want to make accessible to our clients to be able to play in the markets successfully from a commercial perspective, but also from an impact and sustainability perspective as well. So, ladies and gentlemen, as we reflect on Kenya, today is about Kenya, and we think about how Kenya creates opportunities for us to grow. I'd like you to remember that Equity has been in Kenya for 40 years. Equity has built itself from the ground up. Again, there is no element of society that we do not understand. There's no complexity that we are not able to navigate. And I hope that when your time in Kenya is up, you will be able to take away a list of names. It was well worth it when we sat in Kenya. So thank you very much. Enjoy the time that you have with us, and I look forward to interacting with each one of you later on. Thank you.
Thank you so much, Gertrude, for that. Ladies and gentlemen, allow me to make this announcement that I've just been alerted that tea and even some extra snacks are around, and so that we can save up on time, feel free to just walk out. Once you feel you need some, take your cup of coffee or tea or snack, and then come back so that we can proceed on and save up on time. Thank you once again, and I hope you're flowing well. As we reflect on Kenya's economic trajectory, there is truly no better person as well to provide us with an insightful overview than one of that country's foremost economists and thought leaders in the house. Please put your hands together for the Group Chief Economist at Equity, Anzetse Were. A round of applause to her. She comes. Welcome. Please take us through.
The reason why we monitor inflation is because it informs consumption and income nutrition. So when you see global disinflation happening, that is encouraging. For us in Kenya, obviously, low global oil prices has been a boom. We see this holding through to 2026. We see oil at about $60 to $69 per barrel, and this will be important for Kenya. I think on the Africa front, Africa continues to grow above the global average. We're seeing Africa at about 4%. Of course, you're in a region in East Africa, we're going to grow about 6 to 7%. This is important because not only is Africa above the global GDP growth forecasts, but East Africa is also above the Africa global expectations. Global equity markets are up. What we're seeing is that world market capitalization has risen from about 111 of global GDP to about 125% of global GDP. What that means is that a great deal of USD dollar liquidity around, and our equity markets have benefited from that, as you can see. The weakening US dollar has been helpful. This is important for our current stability, which we've seen. Our FX rate in Kenya has been stable. A key external factor has been the weakening of the US dollar. Now, looking at Kenya specifically, I think you all know our economy is expected to tick along at about 5%. That's important. That has been our agricultural performance because the rains have been doing well. Our FX engines are ticking along well. If you look at our 3 top generators of Forex, they've been performing well. We expect that to continue. That is remittances, tourism, agricultural commodity exports. We see that going forward to be quite stable. This is important, not only in terms of inflation management and Forex management, but more importantly in terms of ensuring the economic engine is going along. I'll sort of close with fiscal and monetary policy. I think we've all been looking at the fiscal front. What we've seen encouragingly, because there's a lot of US dollar liquidity and an appetite for emerging market assets, what we're seeing is an opportunity that the government is taking to manage its fiscal position, particularly regarding debt management. So global liquidity going forward continues to provide that space for the government to manage its fiscal position. That was not the case in 2024, so we're in a good position going forward. I think finally on interest rates, we've seen the central bank on the monetary policy front. This has been the most aggressive period of easing for a while. This is important for the banking sector because what has happened is that obviously, banks like Equity have lowered interest rates, but more importantly, the private sector has been hungry for credit, and now in an environment where private sector credit growth is really beginning to pick up, and that's important. I'll sort of just close on the financial sector front. I think one of the things that wasn't mentioned by my colleagues previously is that Kenya is the most sophisticated financial capabilities, not only in terms of tapping and looking at opportunities, but intelligently leveraging them. So I'll close.
Mr. A.Q. Hamza, the Group Director, International Trade Relations. A round of applause to him. Welcome, sir. Karibu sana.
Good morning, everyone. For a guy in global affairs and trade and investment, this is the ultimate, pinnacle of what we try and do. Such a diverse group of people in the room here to do business. I'll be very short. I'll be the last speaker from Equity. I'll tell you kind of why we do it, how we do it, etc., and how businesses from the region, business investment. We looked at the fact that we had a balance sheet of $15 billion. Like MD Moses said, 22 million customers, but also most importantly, 14,000 employees. So how do we help make our 14,000 employees available for our customers to leverage, for our partners to leverage, our stakeholders to leverage? So that's how we started the journey. We've been doing trade missions to our market. So this year, for example, let me just move forward. So as Brent mentioned earlier, it's a key part of the Africa Recovery and Resilience Plan. And so in terms of how we do it in 3 ways. Firstly, we host a series of webinars. So these are a digital series based on sectors, based on geographies, based on value chains, where we identify gaps within the markets in which we operate, and we see how international partners, plus also local businesses, can come in and play a role within there. We then connect them to customers on the ground. We do the financing, and we essentially do the bridge building. So that's the first way in which we help. The second one is what you're witnessing today, the trade and investment roadshows. These trade and investment roadshows are a mix of business forums like this, so that international businesses get to meet local businesses, and local businesses get to meet other local businesses. So if you look around the tables are based on sectors. You go as details and looking at your lanyards. The internationals are wearing white-colored lanyards. The locals are wearing gray-colored lanyards, so that it's made it as easy as possible for you to interact, make connections, network, and work together, and so on. You can look at the lanyards later, by the way. And then the other part that we did was, like MD Moses said, and do business in the markets in which we operate. Tomorrow, they'll be going out there on value chain visits to understand a number of different value chains and the gaps within those value chains, the opportunities within the value chains, and the partnerships that you can build within those value chains. And then just finally, the last bit of work that we do is for those who've identified an opportunity to make an investment. We have, of course, the CEO of Invest Kenya here, John Mwenda. We've built the likes of Invest Kenya and their teams, etc., so that it becomes as smooth as possible. Finally, to the Kenyan businesses, I mean, you saw earlier about on our anthem and on the speeches, the common theme was transforming lives. What we're aiming to do is to bring the world to Africa and take Africa to the rest of the world. And to do that, we've built a network of brilliant partnerships internationally. So today, we have people from Malta Enterprise, for example, from Malta, from Germany. We've got delegations from the Confederation of Indian Industries, from India, from the Polish Trade and Investment Agency, from Dubai Chambers. I can go on. These networks have been built so that we can extend these partnerships for you to leverage, for you to access those markets, for you to be able to build, for you to be able to procure things from those markets, and for us to be able to use our resources to help facilitate. So that's what we essentially do on the trade and investment front. All of the speakers before me have thanked you, but as they said, as the person responsible for putting this together from
there, grab it and proceed on. At this moment, ladies and gentlemen, allow me to call in the panelists here, and I want to start with our morning host, Equity Bank MD, Moses Nyabanda. Kindly take this stage. He'll be joined as well by Dr. James Moria, the Centum Investment Group. Welcome, sir. I know the sitting will be organized by our moderator. For now, just feel free, take center stage, sir. And then we'll also have the Country General Manager, Microsoft, Phyllis Megui, please come up as well. Then we'll also have Tobias Alando is right here, the Kenya Association of Manufacturers CEO. Karibuni sana.
Is it okay? Good morning, everyone. Let's give a round in really what is a very critical component of how we are taking Africa to the world and the world to Africa, which is our trade, and completely reshape our economic trajectory. And I say our because I am a transplanted American who's been living in Kenya by choice for the past 7 years, and the opportunities here are real. Today we're convening leaders across finance, technology, investment promotion, and industry to explore the practical steps that Kenya and the region must take to accelerate industrial growth, unlock jobs, which our young people are asking for and need, and position the country and the region as a powerhouse, not just on the continent, but in the world. Our discussion today will highlight how public-private collaboration, catalytic capital, digital innovation, and industrial policy reforms can unlock growth across every sector. I'm honored to moderate this conversation with an exceptional panel, and I'd like each panelist to introduce themselves by giving their name and then a 2-minute brief opening remark. We can start.
Good morning, everybody. Tobias Alando is my name, the CEO of Kenya Association of Manufacturers. We voice the issues around the manufacturing sector, trying to promote a lot of investment in the manufacturing sector.
Once again, Moses Nyabanda, looking for you guys to truly, once again, Moses Nyabanda, looking for you guys to truly unlock opportunities with equity in the background. Thank you very much.
Good morning, everybody. My name is James Moria. I'm the Chief Executive Officer of Centum PLC. Centum is an equity investment company. So in the capital stack, we are not equity bank, we provide equity capital. And actually Moses here was my classmate. He provides debt on the equity side, and I want to congratulate Equity Bank for building a truly transformational enterprise. I know how difficult it is, given that that's what we're doing. Now, for my opening remarks, something I was sharing with my brother John here is, given everything that is happening in the world, if you look at the secular trends on demographic shifts where Africa's majority of the population, the disruption in global trade in goods and digitization of services, I think as Kenya, given this is a Kenya forum, we have an opportunity to recalibrate our vision and role in the world. My view, which may be controversial, is that the opportunity for Kenya is not in accessing the African market. The opportunity for Kenya is providing a platform for global enterprises to access the global market, and we can engage our African colleagues by being a customer for their raw materials. So seeing our supply chain beyond Kenya to the rest of the world, and perhaps that's something we'll be discussing later, and that's what we are doing. Thank you very much.
Good morning. My name is John Mwendo. I'm the CEO of Invest Kenya, the Kenya Investment Authority. We are the country's investment promotion agency. What we do is really walk with you from when you're just at an early stage prospecting until you have boots on the ground, up to commercial operation. And our partners and Moses, I think we need to laud you as government for what you're doing.
I'm not playing favorites here, but Moses, I want to start with you. On export competitiveness, Equity Bank is one of the continent's...
This. Kenya accounts for only 0.1% of trade flows globally. If you compare that with our population, which is 0.7%, you can see there's a mismatch. We could grow ourselves 7 times in terms of just trade under normal circumstances. That story replicates itself across the whole of Africa, where with our population of 17, 18%, trade flows of 2 to 3%. So there's a and said, how then do we unlock this potential? Because the potential is already there. That gap and the mismatch around population and our contribution to global trade is true in there. So what then do we need to do? And the question is to us as bankers in financial sector. I think a couple of areas. One, the basic one is working with our SMEs first for them to understand how do you unlock global trade. So Trade Finance 101 is key in terms of how would you facilitate a farmer here in Kenya and how they get their produce or their product out to a global market that James did talk about. So we are doing that as Equity. And the example Brent did mention, if I could reiterate it, we, for example, worked with leather and tannery processor. And we've worked back and said, yes, you process the leather. Where do you source your leather from? How do I work with the farmers, in this case 3,000 farmers, so that their animal husbandry is at the right quality? So when that leather hits the factory, then you're able to increase the value of that. But in addition to that, they have an ecosystem of almost 40,000 small traders who use the leather after production. Those people need to access global markets. How do we walk them through the journey of doing that? So that's, Joy, probably the first basic thing that we need to do as financial sector, to educate our population around what is the market out there. Brent did tell you the multiple time value you get by accessing a global market versus just working with a local one. Then for our bigger businesses, then it's how do we provide real advisory services in there? How could we provide blended risk management tools and ensure that we can lengthen tenors, have bigger ticket deals? As Africa grows, we need to participate at scale, something that Equity truly believe in. How could we then work with, for example, DFIs and other development partners in terms of blending that finance that a normal commercial bank would do and ensure then that ticket sizes are at the right level, because when you come with skill, people listen to you, you're able to negotiate and derive bigger value. So Joy, there's a lot of opportunities I believe financial services can do, and we don't need to sit and look at it the way the old trade finance was, which is very archaic, paper-driven, etc. We can digitize it, make it much easier. If farmers could access products even on their mobile phones, that would be a big winner. Thanks, Joe.
No, thank you. And digital trade is a huge topic for growth on the continent when we talk about trade. I want to move to Phyllis. Phyllis is the country manager for Microsoft. Microsoft has been invested in the country for a very long time. You even have your own building if you look in the Nairobi skyline. But Phyllis, on digital transformation, Microsoft has been a central driver across Africa for a long time. How can Kenya leverage cloud, AI, and data analytics to strengthen industrial competitiveness and attract global investment?
Thank you, Joy. I think before I get to how we take advantage, one of the things when I'm in these conversations I like to do is just, we're talking about industrialization, but what's the actual context? So Brent took us through the global changes that we're seeing. Industrialization in itself has actually changed. We're no longer talking about agriculture as we knew it, manufacturing as we knew it. That has been disrupted by technology. Now, if you look at the opportunities that we have in Kenya, it's green industrialization. It's building digital value chains. And so when I think about how Kenya can take advantage, and this is both from a point of the government, private sector, and investors who are coming in, it's how do we look at our value chains and start to transform those. Now, as a country, not just Microsoft, but other technology partners are coming in and saying, because of the opportunity that exists here and the level of skill and talent we have here, we're able to set up. I'll tell you, Microsoft, the office that Joy just referred to, we have a development center that develops solutions for the world. To your point, Moses, here. That's about 400 skilled resources that we were able to recruit locally. We're not the only ones. Google has done the same. AWS has done the same. So we are starting to see a growth in actual use of these resources that Joy is referring to. So back to my value chains. How do we now start to take advantage? I need to think about manufacturing from the point of the person who's going to be using my product. How do they access my product? Now, again, back to the numbers. I'm like Brent, I like numbers. If 49% of the Kenyan population is below 16 today, and fun fact, 70% is below 30 years, majority of them are digital native. How do I then interact with them? How do I not only interact with them as users, but also as people who can, as a source of input in how I create, how I build my product, how I take it to market? I do think the adoption of technology is going to be how we get that fast-tracked. AI, particularly, is transforming value chains in just that we're able to not only personalize, and I will share a story, but also unlock value in places that we didn't see it before. Now, I can't share the name of the startup because I didn't ask for their permission before I sat on stage, but I think it's a relevant one. It's a small startup out in one of the counties in Kenya that started to look at how do we transform the dairy value chain. Now, you heard about the livestock that we have. So they started working with farmers and what in Kenya we call the boda riders, so it's the motorcycle delivery guys, on how do I make sure I maintain the quality of the milk between the farmer and the cooperative where the milk is being delivered. Now, to the farmer, all they know is they get a WhatsApp message that says your milk has arrived, we've checked the quality, and actually it is good quality. And then that goes on the back end to someone who now checks for this farmer, number this is how much milk we're getting on a weekly basis, on a monthly basis. But actually at the back end, it's all AI driven. Now, I'm using that example because a lot of the time when we think, how do we leverage AI, we think I need to have this whole big machinery. But actually, to interact with the end user, there are already tools that are available, and I say that again because Kenya is mobile and digital native.
No, thank you. I mean, tech adoption and tech education, as you said, is going to catalyze our transformation. I'd like to move to Dr. Mora on strengthening the industrial ecosystem, because Centum has deep experience in anchoring large industrial infrastructure developments. So, Dr. Mora, what role can investment holding companies such as Centum play in mobilizing private capital for Kenya's green energy, value-adding manufacturing, and export-led growth? And just to mention on Kenya's green energy, the Kenyan government is the lead architect of the Africa Green Industrialization Initiative, which is an initiative for the African Union on industrializing Africa clean and green. Dr. Mora?
No, thank you very much for that question. The objective here is, and I remember I was joking with the Minister of Investment and Trade, that when you sign a trade agreement with the EU, you must have goods that you intend to trade with them. Otherwise, then what's the point of signing it? So the objective here is that we need to be able to transform our raw materials and be able to transform our human capital into exportable services. And for a long time, we've marketed Kenya conceptually and from a policy perspective. But investors like this need to get a landing point. When I come to the country, where do I actually start operating, and is there the physical infrastructure to do so? And so to move from the theory to the practical, what we've done in two areas. One is export of services and export of goods. So for export of goods, we've created a special economic zone, which is Vipingo Special Economic Zone. It's sitting on 2,000 acres and provided all the infrastructure. So whether it is water, there's a water desalination. I'll speak shortly about power. There is infill infrastructure. And that is to enable an investor like the ones who are here or in various parts of the world who want to come and have a landing point, to have a landing point where there's both infrastructure and an enabling fiscal environment, leveraging our special economic zone ecosystem. That way then when you export your goods, you're able to do so competitively. And that's what we are doing as a domestic investment holding company, because you have a higher risk appetite than a lot of these investors, and you're also shortening time for them. We've done something similar in services, and we were the first entity to establish a purely focused business services special economic zone for enterprises that are exporting services. In fact, if you look at the global trade in services, it's now higher than the global trade in goods. And the idea we had was that there's a global market for services being produced from Kenya because of our human capital. But the issue was the enabling regulatory environment. So we've created that in Two Rivers International Finance and Innovation Center. And that was only 2 years ago. And so far, we have about 40 enterprises. And the aggregate employment is in excess of 7,000 people. So that's what we're doing. Now, the final point was around green energy. Because transformation is energy intensive. We are working on a geothermal power project, or rather we have a zone in Naivasha where we have a geothermal project. And I think you can maybe develop about 140 megawatts or slightly more. And now with the power wheeling regulations, you can generate your power in Naivasha and access it in Vipingo at the coast at just a slightly higher tariff than what we are selling to Kenya Power. Just to give an example, if you are a manufacturer, you're going to buy power at about, I think Cam will tell us, maybe 25 to 20 US cents. We as generators sell power to Kenya Power at 8.6 US cents in our PPA. And so the spread between what we sell the power at and what you'll eventually get it at is about 2.5x. Now, when I integrate my generation with my zone, then I can avail that power into my zone maybe at around 10 US cents. Now, for a lot of these activities, including digital, like data centers, what you're essentially selling is power. So that's a combination of what you're doing. And really the idea is now to make it easier for investors to come and set it up, be quicker and scale a lot faster. Thank you.
No, thank you for that, Dr. Moore. And in fact, the other thing maybe to mention is that Kenya is unique in the continent and actually in the region also in terms of the fact that I think, 90% of our energy comes from renewables currently, which makes it very attractive for manufacturers to come and set up, and it's reliable power as well. And so maybe, Tobias, I can just turn to you for a second so you can talk about that from the manufacturing perspective. What does our manufacturing footprint here look like? And what do you think are the most important policy reforms needed to reduce production costs?
So the manufacturing sector contribution to the GDP is about 7.4. We employ about 300,000 people. Our contribution in terms of tax revenue is about 400 billion. But looking at this picture, there is a potential for growth of the manufacturing sector. There's a potential to increase our tax revenue contribution to about 1 trillion. There's a potential for us to employ over 1 million people in a year. But there are a couple of things that we do need to address generally. If you look at Africa and in the manufacturing context are investing in Africa, if you invest in Kenya and in Africa at large, you access about 50% of the world GDP. So showing you there is a potential around the manufacturing sector, and we believe in it. In terms of what the government needs to address for us to reach that level of increased tax contribution and also employment, we've seen a number of course, we've seen a number of improvement, but also we've seen a number of challenges that we need to address. One of them is around adherence to the national tax policy. Predictability around tax policy is a major concern. And in fact, our push going forward is to have government agencies have people with commercial acumen. Because we've noted in many cases where a fee or a levy or a tax is introduced without really assessing the implication on the manufacturing sector or on the business. And these simulations we can easily do to assess what will be the implication of this tax, because you may collect it for 1 year, but then lose it in the next 3 or 4 years. So around taxation is a major issue that we need to align. The other thing that is most important is around the costs of energy. The cost of energy in the country is slightly more expensive. It may be reliable, but even as we speak right now, we are at about 96% of the installed capacity. Meaning, if a major investment comes in the manufacturing sector that consumes a lot of energy, then we will not be able to sustain the energy that is provided to all industries in this country. That will lead to what the president mentioned, load shedding. So we need right now to do a lot of investment on our energy infrastructure if we want to take the manufacturing to the next level. We need also to do a lot of investment in our port infrastructure. The port that we have right now was planned 5 years ago. It cannot accommodate any more goods coming in and out. So we need to invest on the port infrastructure. We also need to invest in the airport infrastructure. Our airport also cannot contain the potential that we want to have as a country. The other major issue is around regulatory burden. Right now, if you invest in Kenya in terms of the manufacturing sector, the challenge we are seeing, and we've already flagged it to government, they're doing regulatory audit, where we have numerous government agencies taxing or charging you fees and levy, which are more or less duplicated, because one agency will charge you this, the next agency charges you the same, but there's no service that is provided. This is eating into the competitiveness of the sector, and we need to address this urgently. Our proposal and our recommendation is that the government needs to set up an ease of doing business department that will look at all these charges and eliminate those charges that affect our competitiveness. But largely, the manufacturing sector has a huge potential, and Kenya presents that opportunity for investment, but we need to address these infrastructural issues that challenge us. The road network in Kenya, the rail network in Kenya, if we want to go and be the best, then conversation should not be around we got independent at the same time. Their share of export to the GDP is over 90%, meaning they export a lot. So Kenya has that that opportunity and potential. We just need to deal with those key issues and provide incentives around export, because it's only through export that our manufacturing sector will grow. Focusing on only the local market and the African market is not the way to go. It's a way to go, but it's not the only way to go. So we need to have a visionary mind to be able to even target more markets outside there. Thank you.
Thank you for laying out that landscape for us. John Mwenda, CEO of Invest Kenya. I know you've just gone through a rebrand as well. You are essentially the country's chief salesperson. So tell us how you're doing that and what messaging you're giving to investors.
Thank you, Joy. First, it's always good when government speaks last so that I get to know how to frame this. So I would like, having listened, of course, to my good friends who I all have a personal relationship with and who are, established business people, I would just like to provide a context, and then I break down just 3 points, then we can just frame this well. The first is, at a macro level, Kenya is the largest economy on the eastern seaboard, and we continue to do well. And it is important to frame that because we are competitive in a number of sectors. We may never win in everything. And whilst, of course, my brother, for example, Tobias, you've spoken about manufacturing, which I relate to everything you have said, the services sector has outpaced growth in other sectors, for example, okay? In the technology space, for example, Kenya is now, I think, 30% of all startup funding on the continent is coming to Kenya. We are Africa's Silicon Savannah. The tech and ICT sector is 9% of our GDP. Manufacturing is about 7.5%. Tourism is 10%. The creative economy is 5%. Agriculture is 22%. And the reason I'm saying this is, Kenya is possibly the only country in Africa that has got more than 5-6 sectors that give you an aggregate play so that when one dips, then the other kind of levels up. And that's the reason why I'm sure banks take the view of the sector approach that you see, which you also have adopted. And we continue to do more. And the story of why Kenya has been told, I will not be able to do that. But I think then to my 3 points is really around one theme of what we are doing as government is competitiveness. And you address competitiveness for both manufacturing and other sectors by really dealing with 3 main fundamentals. And the first one is really the building blocks around infrastructure investments. And in infrastructure, there are 2 pockets. The first pocket is around, the rail system, the ports, the road infrastructure, the power. And I know if you live in Kenya and if you're visiting and you have not heard this, we are growing generation from 3 gigawatts to 10 in the next 2.5 years. That ambition has just started, and we hope that is for everybody at a macro level. And the road infrastructure, there is an ambition to do, 100% growth of that in the next 2.5 years as well. And there are many pockets of hardware, if I may call that terminology, that are coming to life in the next couple of months You know, we are going live on an international tender for the airport fairly shortly. We are going live on the port ecosystem fairly shortly, and that is really to address at a macro level for everybody on terms of infrastructure. The second subset of infrastructure is really around our economic zones. And our economic zones is where my brother is doing both. There are economic zones for service, and traffic is a good example for what they are doing, and the incentives around that. And also government zones, like we have a green zone in Naivasha, where power is at source, and the economic zones, be it special economic zones, export processing zones, industrial parks, are part of making sure we have a competitive environment that is plug and play, that then reduces the pace at which investors can then be able to play. And there is more I can talk about, but that's just one pillar. The second is really around the value chain approach, and I know Brent spoke about it, and we believe in government in a value chain approach, because when you really unpack the challenges across an entire value chain, then you can begin to scale up. And I like the work that, you know, we have done together on the leather sector, for example. And when we go to KAM, Kenya's Union Manufacturing, that's the same conversation we talk about. How do you really unlock the value chains so that there can be an end-to-end? Because remember, from Kenya, I mean, it's half of world GDP, but you can grow your business to serve $50+ trillion market access around the world. So our market is not really my neighbor next door, it's beyond. So that opportunity is really huge. We can only do that by scaling up the value chains and unlocking them. And the third and final point is really about the business climate, the ease of doing business. And in the ease of doing business, there are two subsets. And one is taxation and predictability. And I think we appreciate that is an ongoing conversation. Government has come with policy of having a 3-year tax regime. It's early stage. We cannot fix everything at once, but I know for the first time is when we're having a 3-year forward-looking journey. We'd like to see whether that can become 5 or even 10 years for sectors or areas that is possible. Some areas, maybe a year is too much. I am told in AI, you blink, and what was valid a month ago, tomorrow has changed. So how agile are we to adopt to change today? So the predictability in traditional manufacturing and you know, robotics and AI and everything is going to be different. And then the final point is really on regulatory burden. Most of what spoke to under that business climate, ease of doing business is, are we really deploying government and public sector to be as responsive as they should be? There is really an ongoing heavy work stream chaired by the Deputy President on how to unbundle it, do a gilliton so that we can really lessen the burden of compliance, make it more easy to deal with business issues, and that's what we exist. So for ourselves at Invest Kenya, by law, we have a mandate to unlock business climate issues. It's complicated because you have to coordinate everybody, and it's never easy. But you have to have a listening ear to resolve that which businesses want. And I just want to do a right of rebuttal for public sector. Public sector is home to one of the most talented pools of people we know. So commercial agility exists. You have just seen the government-owned enterprises bill where we have just converted 60+ agencies into now commercial enterprises. That is the way to go. It's only sometimes the public-private dialogue doesn't happen as much as it should, but we are doing that on a more pragmatic basis. And if you're looking for a place to invest for the world, think no other than investing in Kenya. Thank you very much.
I think I'm sold. Thank you. Thank you so much, Don. I understand that there's no questions on the Slido, so we can keep going unless there's a burning question from the audience. Okay. Yes? Okay. All right, great. Phyllis, I want to come back to you because I think it's been mentioned a bit, but not really in detail. I mean, the Kenyan government has been going through a digitization journey. We're now also we have e-citizen and other digital platforms. We're also talking about bringing DPI, which is the digital public infrastructure, to the country. I mean, how does that digitization support the investment environment that the gentleman described?
I think simply put, and this is evidenced by many of the countries that we look up to as Kenya, and countries where we're seeing a lot of growth. Strong digital public infrastructure does attract more investment, and this is because a lot of the industries, again, that we're talking about, and actually let me borrow from what both Dr. Moore and John have shared. As nations transform to actually look at supply chain, we're actually having a conversation really about data-driven supply chains to unlock that value. So today we've had a conversation across agriculture, manufacturing, and logistics. Previously, where we looked at this as if they were different, it's actually now one stream. Anyone who's in manufacturing needs to understand what's coming out of agriculture, and they also need to be able to understand what's happening on the logistics side, so that I'm both unlocking productivity, but also be maintaining my competitiveness long term. So I would say, when I look at the country, both from a policy side and also the investment in infrastructure, we are actually at the place where it's very attractive to set up in the market. And I said before, Microsoft has presence. We also have several technology companies coming in. Just this week alone, I have met with 2 other technology companies that came to visit Microsoft to find out how you're doing it. How do we also enter the market? So if I think about, and a lot of this are not talking to us just because of Kenya, they're talking to us because of what this means for East Africa. One of the things that we've seen is Kenya has also taken a leadership in this DPI conversation, not just for ourselves, but also for East and Central Africa. And I think as an investor, when you're looking at that, that's a very attractive proposition, that you, one, have a landing ground that is stable, but also you have someone who's kind of risen up to say, I'll be the voice, and we can go together into the East Africa market.
Great, thank you, Phyllis. Actually, we do have a couple of questions from the audience. So, Moses, this one is to you. What is the plan of the bank in collaboration with fintech payment gateways and aggregators beyond borders? And as we know, in the continent, the AFCFTA has a platform called PAPS, which they're trying to implement.
Thanks a lot, Joy. In this agenda we are discussing of trade, the oil for it is payments. And we haven't been good at it, so we need to admit that we've had gaps as an industry, as a continent, in how do we facilitate trade through payments. So bigger challenges has been around, are payments instantaneous? If I'm trading in Uganda and I pay a business which has bought from me in Kenya, how long does it take to get that cash? The slowdown of that, a big issue. Interoperability, even within the country, a big challenge of how do we settle payments. The other big area is the currency. It draws a lot of political heat around on what currency should you be settling at. So where we sit as a financial institution, and right for the question that has been posed, how do you get to break these barriers? So we are signers onto PAPS, which is supported by the AFCFTA, but also within Eastern Africa, Equity has set up its payment rails to be seamless. So as we conduct business across the 6 markets that we currently have, it's very easy for you to settle with a trader in DRC versus a trader here in Kenya. So moving goods within this region is much quicker. And that cause settlement then would happen almost instantaneously within the equity rails. But Joy, we also can't succeed in doing this without partnerships. And that question around how do we work with integrators then becomes quite important. So we need to democratize that bit and ensure that then interoperability is much more seamless, how various aggregators connect into the financial system is frictionless. Because if we get to do that, then trade flows. Right now, if you're to send a SWIFT, it takes you 2 to 3 days. You could have as well flown with the money to Uganda and settled. So we need to unlock that to ensure that trade then is facilitated much more smoothly.
Yes, there's still a lot of hand carrying of cash across the borders in the region. Dr. Moore, I want to ask you, given what you've heard here this morning, and can you prioritize what are maybe the top 3 investments or investment focus areas that Centum might be looking at, or that these investors should be looking at?
Yeah, I think, thank you for that question. Where Kenya has a competitive advantage in terms of global trade as a hub is in trade in services. And that's because of our deep human capital and large human capital and relative wage advantage relative to the Western world. And I know this factually because when we set up Traffic, we've seen actually we have more demand than supply of space to business process sourcing companies, shared services centers. To give an anecdotal example, there was an accounting firm that was setting up there. They were looking for 100 or 200 accountants. We got over 1,000 accountants, tech companies. So you can be very competitive here in that. And also, it's labor mobility here is very easy relative to other parts of the world where it's now becoming quite difficult. The second area is manufacturing that is oriented towards agricultural inputs, because we are largely an agricultural economy. And our neighbors are also agricultural, and we are close to the port. And we've seen a lot of export companies set up within our zones, which are adding value to agricultural inputs and creating a platform for these investors to be able to come and set up easily.
Thank you. And I think I'm going to ask the last formal question to John Mwenda. Somebody in the audience mentioned the 47-county competitive index report. How are you, I mean, we have big cities in Kenya, Eldoret, Mombasa, Nairobi, of course, people know them. But how are you incentivizing diversification of investment throughout the country to really grow the economy at the ground level everywhere?
Thank you, Joe. A very good question. While investors come to Kenya, eventually they will land in a county. And counties, there's always good, friendly competition because everybody wants to do everything. I think really we must have a value chain approach so that we can see where does aggregation happen and where does production start and finish. Otherwise, we could have a lot of initiatives that don't come to bear because of the complexities of ensuring you have scale. That said and done, being competitive in counties has not been an easy thing. I know Tobias would have views on how that journey has been since 2010. But there's good progress. The autonomy of counties vis-a-vis the national fabric that has to come together is something we are all aware of. But I think we are working well. For instance, this coming week, but one on the second week of December, we are doing a county investment readiness forum. And it is just equipping counties with the right skill set to ensure we all understand what boxes must we tick. I am of the school of thought that capital is a coward. And capital being a coward, you have to court it. And courting it, you have to have the right boxes ticked. And those must be ticked at our level at the national government at the very top, and they must be ticked to the northern frontier of the country all the way to the southern one and east and west and so forth and so on. So the one initiative that I can close with is the famous County Aggregation Industrial Parks initiative that is aggregating this investment across all counties. We are actually now down to a single value chain approach per county as a start. So then you can build that pilot to see maybe 3 of them can come together or 4 to create a hub that then can have an opportunity that is scalable. Otherwise, we can spread ourselves too thin. And then when we come, the bankability of the projects then doesn't exist. So we are working very hard to create viable bankable projects across the county so you can be able to see. And That is a lot of work and ongoing, but hopefully by the time we do Q1 or Q2 next year, we want to be able to showcase successes, possibly not in all, because for example, if you take a view at our pipeline, it's for the country, but it's where we have active pipeline projects, it's just under half of the counties. You know, investment grade projects. So we have to do more to do the entire country, but at least there is good trajectory and momentum, and we are thankful for that. Thank you.
That's good news, because I know we go out and we talk to investors all the time with Dr. Mwangi, and we're always asked, what is the pipeline of projects? So now I think we'd like to move on to closing remarks, but I'd like to ask Tobias to start and also to give his thoughts on John's.
So I'll start with the issue of the counties. If I had an opportunity, I would call for an economic referendum and do away with some of the counties, because they are basically non-tariff barriers, majority of them, almost 80%. So the hard bullet to bite is to do away with some of the counties, and we remain with a few counties that can facilitate trade. As I close, manufacturing has huge potential, and it is the way to go. No economy has ever grown effectively without the manufacturing sector. Kenya has that potential, Africa that has that potential, and I believe in it. Thank you.
Thank you. Yes, you can clap. Phyllis, technology.
I think we've kind of laid a pretty solid foundation in terms of what Kenya actually is on the technology plane. The skills, the fact that we are almost 90% green, and so there's an opportunity here for green industrialization. But I want to add a few additional facts, things that we probably have seen on you've seen on the public stage. When we look at technology adoption, Kenya right now has 63% AI adoption in higher education. That's without schools actively going in and actually starting to leverage AI. That's the kind of citizenry initiative that we have. We already heard about this young population. This young population, I think, is number 4 globally in the use of, ChatGPT. So we have a population that has really dived into understanding technology and what that can do. John talked about we're getting 30% of the total startup funding. The startups here are not just working in the fintech space. I'm seeing more and more in healthcare, more and more in agri-tech, and all these industries that that are now coming up that create an opportunity for really deep investment. I would say the conversation that we're having today and the intent to unlock the East Africa market and unlock shared value is going to take all 3 parties, and I'm glad we're represented here, government, development partners, and private sector, working in that one shared vision, which is how do we actually build the next 10, 20 years? How do I participate in this opportunity? How do I unlock it? I'll share a little bit about some of the things that we're doing, because I can see a few of my partners here. In this digitization and digital industrialization that's happening, we are doing a lot of skilling. So if you're thinking, I'm investing in Kenya and technology is transforming so fast, how do I actually still make sure I have a viable workforce? And it's not just myself, but I'll talk about Microsoft specifically. We are working with government to upskill government employees. We are working with private sector. I work with Kenya Private Sector Alliance to upskill not just the large enterprises, but also MSMEs. And most importantly, because I did say earlier, 49% plus is below 15. We're working with institutions in transforming curriculum. I do think that is important, because as you come into the market, you're not just looking at today's workforce, you're also looking at, am I going to have pipeline of talent to actually grow in the way that I want? So amazing opportunity, and I do hope, as Moses told us earlier, that we are able to actually partner in unlocking this.
Great, thank you, Phyllis. Sorry, Moses, please, your final words.
Thanks, Joy. You need a partner that believes that private sector is what will transform Africa. You need a partner that is present and understands the terrain that we are working in. We need a tried and tested partner that will handhold you through that journey. That partner is Equity Bank. Thank you for joining us today.
Dr. Moria, your last words on what is the hottest investment these investors could make?
First, I want to concur with my brother Moses. Second, I just want to make the point that Kenya has a huge, huge opportunity given what is happening globally. If you look at our geographical location, access to human capital, access to raw materials from the rest of Africa, access to green energy, we can be a global supplier to the rest of the world, and we can host global enterprises here. So I think the challenge for us as Kenyans here, one is to raise our ambition. To raise our ambition beyond just the African market, but think about how can we be a customer of other African countries and a supplier to the rest of the world. We need alignment, and I think, John, we have work to do to update our vision 2030. Because without a common vision, now there's total confusion. Last week, I was chief guest in the KRA, Kenya Revenue Authority graduation. And you know, I made the point that because we've imported a tax policy from countries where they are at full employment, then the focus will be on collection. But here now, we have missed a step. The first step is get to full employment, then collect. And so the tax policy should be enabling of first moving from 3 million Kenyans employed to 20 million, then we collect from them. And it's not their fault. It's because we don't have a common vision, a common ambitious vision. And perhaps if we can all come together, then we can be able to align even counties and everybody else to really convert this particular opportunity that we have. Thank you very much.
Thank you very much, Dr. Moria. And just to mention, one thing that we didn't talk about here is that the city itself is actually destined to grow very fast in the next 2 to 3 years as the United Nations builds out a brand new campus here. For those who don't know, the United Nations has its 3rd largest campus here in the world, and they are moving 4 agencies from New York and about 17,000 employees within the next 3 years to Nairobi. So we will certainly grow. John, the last word to you as our chief salesperson. What's your best pitch to these investors and traders?
Thank you, Joy. I'm actually the Chief Investment Officer for Kenya.
Yes.
I think, really, just to sum it up, there are always the ups and the downs, but overall, Kenya is really a very wonderful place to do business, and I'll just give a small example. Last evening, I was in a room with 30 startups. I don't know whether you joined me later, Phyllis. And there was a huge debate. And the huge debate was about talent, and where there's a report that says Kenya is the 4th in Africa on AI talent in Africa. All those startups, they refuse. They say Kenya is number 1. So I was like, oh, that's a good thing, and I wasn't saying that. So they say Kenya is number 1, and on AI talent, real practitioners said that, but the report said 4th. That was a good conversation. I felt proud as a public sector person. But Kenya has a lot going on which is good for us. 93% renewable energy, a good plus. You know, inflation is low level, nearly 4%, stable currency. You know, we are scaling up our infrastructure investment just to be able to be agile and ready for business, and I could go on and on. All I am saying is we remain ready, open, and safe for you to do business. We are a listening government. We can always have tough love conversations. I wish I could do a rebuttal on the point on counties that Tobias made, but my remit is purely economic. You know, one of the strongest points is we are a very progressive democracy. And democracy is an enabler for business. So at a national level, there's a lot of delicate balancing, but we remain open. And if you want to know whether people are doing and getting an adequate return, talk to the bank hosting us today, look at their numbers, things are looking up. They're making money across and everybody is here. And we want to just say the future is bright. Kenya is a place to be. From Kenya to the world, that is where you need to be. And we are really proud of this engagement, and I thank you so much.
Thank you so much, John. So I just want to close the panel by using one word, and that is opportunity. I think what the panel has described today is the Kenyan opportunity, and we hope that you will engage with us on it. So a round of applause for the panel, and I want to turn it over to Mina now.
Thank you so much to our panelists. If you don't mind, you could just take a quick picture together, so kindly stand right here at the front. We appreciate you for your time. Asanteni sana. Ladies and gentlemen, even as the panel takes a picture, Equity Bank is doing some great work on the leather industry, and I'll be queuing in a video in a moment for you to see it after the photo. Thank you so much for that. And by the way, if you asked a question and it was not directly answered, I implore to the panelists to kindly check on the Slido and directly answer some of the questions there. That's why they are there. Thank you so much. Another beautiful round of applause to the panelists. Asanteni sana. Great. So I want to draw your attention to the screen now, ladies and gentlemen. As I've said, Equity Group is doing some work on the leather industry and have signed some MOUs with the Italian side. So please check out on the video as we, oh, excellent. I think it will come in later on. Thank you so much as well. So I just want to repeat the announcement for the ones who will probably ask it. Are we taking that break? I already allowed the break, and I said individually, just feel free to walk out, grab your cup of tea, come in with it. That's why we have the roundtables and the likes, so that at least we can try and manage time. We have a very powerful delegation coming in this afternoon as well, led by the Cabinet Secretary, and we would want to keep time because they will keep time as well. So please allow and feel free to do that. Thank you so much, ladies and gentlemen. Allow me to move on straight to the Kenya's competitive edge, and that particular edge is about how the private sector is powering economic transformation. And in the House, I want to call upon great panelists as well who are right here. So please put your hands together for me as I invite the following persons. First of all, we start home. Brent Malahay, kindly take the stage. A round of applause to him. He was right here. He's the Equity Bank Kenya strategist. Let's also have, in the House, we have Carol Karaoke, the Kenya Private Sector Alliance. A round of applause to her as she comes as well. Next as well, we have Kaushal Singh, Confederation of Indian Industry. Please welcome to the stage as well. And in the House, we have a man who ensures we have the most important goods in our houses, Lako Chieng, the CEO of Unilever East Africa, is directly in the House. Welcome, sir. And of course, joining as well is Martin Mojo from BASF. Martin, karibu sana. Welcome. Thank you so much, ladies and gentlemen. And Zach, if you don't mind, this is the moment I could just ask the people to participate with me. And I have a poll I wanted to ask you because we want to talk about matters private sector. I don't know what your thoughts are. If I could have that poll. Oh, excellent. Thank you so much. I think we'll get it later on. But ladies and gentlemen, private sector is very important and continues to be the driving force behind the country's rapid economic progress, shaping industries, expanding regional trade, and catalyzing innovation. And by deepening value addition, as you've had, investment, talent, and strengthening market linkages, businesses are unlocking new opportunities that position Kenya as a competitive future-ready economic in East and Central Africa. And by show of hands, can I see by show of hands, how many of us here represent the private sector? Wherever you work, you know you are at the private sector front. Let me see by show of hands. It's like the majority. My panelists, as you can see, the majority in the House. Our big boss of the Kenya Private Sector Alliance is right here. That is Madam Carol. Carol, it's good to see you, and the speakers as well. Allow me to start with one of the gentlemen who produces a lot of content for us in terms of products that we have. So, Luck, I want to start over with you. But actually, before I do that, just allow me to just allow you to have your own 30 seconds just to introduce yourself. We've had Brent, so probably it's the rest of the persons. Just introduce yourself very quickly, and you could just give a context of yourself in 30 seconds. Let me start from that end, coming down that way. Please go ahead.
Hello, everyone.
Hi, Lak.
Good morning.
Good morning.
So my name is Lak Ocheng. I'm the general manager for Unilever. The commercial business, we have a factory as well in industrial area. And from this factory, apart from the 4 countries, Kenya, Uganda, Tanzania, Rwanda, we actually do export beyond those areas into DRC, South Sudan, Southern Africa, Zambia, Zimbabwe, Malawi, and such. And for some of our food range, Royco, for example, we export to our diaspora in the US, Europe, and Middle East.
Thank you so much.
Nice to be here.
Yeah, great to have you as well. Let me go to the end completely. Go ahead, sir.
Thank you. My name is Martin Mojo. I'm the National Sales Manager for BSF East Africa. At BSF, we pride ourselves by the mantra of creating chemistry. Many of you should be knowing that. At BSF, we do everything within our power to ensure that we build sustainable, innovative solutions, specifically for agriculture industry in East Africa. Of course, we are also in other divisions like surface technologies and performance materials. We do this by connecting farmers, by connecting customers, and of course, the society.
Thank you so much. Kausha?
Hello. Very good morning. Pleasure to be here. Privileged to represent Confederation of Indian Industries. It's one of the largest trade bodies from India. And I am Kaushal, and I represent Purnata, which is into tech-enabled global upskilling organization. So we train business owners and leaders on business and financial skills, and more importantly, leadership skills that are vital for scaling of businesses. Yes, pleasure to be here. Thank you.
Thank you so much. Carol, go ahead, please.
Good morning, everyone. My name is Carol Kariuki. I'm the CEO of Kenya Private Sector Alliance, the umbrella body of the private sector in Kenya. Thank you.
Thank you so much. Brent, I think they know you already. Thank you so much for that. Let me start with you, Lak. As I promised, how can multinational companies like yours, Unilever, further contribute to Kenya's private sector dynamism? And I'm talking about through localization of supply chains, enhancement of local manufacturing capacities, and the like, just to ensure we have inclusive business models.
Yeah, thanks. Maybe let me start by just articulating a little bit about our sustainability agenda.
Go ahead.
For this part of the world, it's actually focused on plastic circularity and the impact we have on the environment, and then our impact on livelihoods. So from our experience, we saw that there was a bit of a gap as a leading multinational as well. Really, we had an obligation to contribute towards addressing some of the global challenges, good for people, good for the planet. So we worked together with an organization called Mr. Green. And through Mr. Green, we actually are driving plastic circularity to the extent of doing 100% circulation of the packaging, plastic packaging, and then that goes back into our product. So, for example, we have some of our home care range products, such as Vim scorers, sunlight scorers, dishwash liquids. The packaging that's used there are actually 100% recycled. And we are looking to support that across the industry. We actually are working with the Kenyan Association of Manufacturers and other industry players around this. The second one is about livelihoods. And it's driven by the belief that through our value chain, we have an obligation to make a difference. So in 2019, we had 78% of our raw material inputs being imported. And then we set on a journey and we set ourselves a target that we said we wanted to take that to 50% by the year 2025. So we were quite intentional around driving that, looking for local sourcing, working with SMEs to build their capacity and capability to be able to supply and meet our quality needs and such. And that one meant working with other parties to drive that. I'm actually glad to say that as we speak, we are sitting at 70% locally sourced raw materials. In the agricultural sector, we work with small-scale farmers to bring spices and herbs into our value chain. We can't do that on our own, dealing with small farmers. So we actually work through aggregators. So a good example for us is Njoro Canning, who help us to drive and manage the relationship with small scale holders. So we believe that multinationals, as ourselves, industries have a role to play. If we are intentional about it, it means it might take a bit of investment. We, for example, had to support, one of the observations we made was that most of our suppliers tended to be big companies as well. Because of the volumes that we consume, the quality standards that we have, and there was a dearth of capability on that. So we had to invest behind supporting them. Working with partners, for example, like Equity, then we are able to then support them as well to access financing and such. We, across actually Equity is a very good partner for us in that respect. Both in Kenya and Uganda, we are really doing, and Rwanda as well, we are doing some great work together, as an example.
All right, thank you so much for that. And you just touched on equity. Brent, I want to bring you in now. And I want to ask you about the financial sector perspective, because that's where you sit at. What regulatory or fiscal or financial enablers are most urgent to unlock the next wave of private sector growth? And how can banks like yours, Equity, accelerate access to affordable capital for expanded enterprises? Briefly.
So, Equity Group as a commercial bank, and I think just generally for commercial banks, we are very well positioned to help drive this development and de-risk the value chains. Our role ultimately is to intermediate resources in the economy as a commercial bank. And we do this financially through our balance sheet. So ultimately, our view of a commercial bank is not just to provide financing, but to apply that financing and apply it to essentially holistically to value chains. And because, for instance, we have the 22 million customers, we're in a very good position to do the connections like we're doing here today. So we have, because of our inclusivity approach, we have the smallholder farmers that Unilever is looking at, all the way to the large commercial farmers. We have the manufacturers, and because of the activities we have in connecting global supply chains, an institution like Equity Group, because of our foundation that does a lot of capacity building with the smallholder farmers that Unilever is looking at, commercial banks set up like Equity Group are very well positioned to drive what we are calling private sector-led development. Okay. And the principles around this is essentially blending the different forms of capital, philanthropic, concessional, commercial, and applying it along the value chain, where philanthropic is applied for catalytic seeding activities and building the foundations, which more often than not are not readily available in African value chains. You have concessional funding through the development finance institutions, which Equity Group crowds into its balance sheet. And this is ultimately to help de-risk, but also importantly, crowd in commercial funding, which we crowd in our balance sheet. So at the moment, a lot of this is done in silos. What needs to happen more is for this funding to be applied as a continuum rather than as separate funding sources, but importantly, applied seamlessly along value chains, so that not only is there a multiplier effect, but there is ultimately a circularity to the earlier comment around circular, that itself feeds itself, so that the philanthropic capital can be applied not just as a one-time benefit, but it can be leveraged up with concessional, with private or with commercial funding. So there is definitely a role for private sector. There is, more importantly, a role for commercial banks. And hopefully what we're demonstrating with what we're doing at Equity Group, we're hopefully providing some sort of a use case or an example of how private sector can play a more meaningful role in development.
All right. Thank you so much, Brent, for that. Let's get in now to persons on trade, definitely. And Kaushal, I want to start with you. You're representing the Confederation of Indian Industry. If you hear me say CII, is that confederation? So just get specific a little bit and talk about opportunities that you see for deeper Kenya-India industry collaboration. Particularly, maybe you could touch on the manufacturing infrastructure and tech, and talk about how CII can help strengthen these bilateral investment flows and tech transfer.
Yeah, absolutely. So in our perspective, I think Kenya and India already have a lot of trade and investment going on, and India is one of the top bilateral traders with Kenya, and I think the trade stands at about 3.5 billion as of last year. And there is, like you asked, a lot of scope for improvement in manufacturing, infrastructure and technology more specifically. I'll first touch upon the manufacturing. So with the global scenario, specifically US tariffs and global geopolitical tensions, a lot of India-based exporters are very keen on diversifying their risk of just exporting from India and would love to set up factories and capability centers here. And that would bring in a lot of capital and also create a lot of employment in the region. And next, I would like to talk about infrastructure. And over the past 2-3 days that we've been here, I think infrastructure has been the buzz word that we have been hearing across renewable energy, roads, bridges, whatnot. There's been a lot of talk around it, and our delegation did get a chance to meet with some of the ministers here. We met the High Commission here, and all of them are so interested in getting a lot of focus is there on renewable energy and a lot technology transfer in that specific sector from India and what Indian companies can bring here, specifically in the private-public partnership sphere. And I think the third one that you had checked up was technology.
Yep.
So with technology, I think a major thing is Kenya and Nairobi are already being seen in the world atmosphere as a leading tech hub, and India obviously is a leader in the space, and I think there's a lot of space to collaborate. I did get a chance to meet some very good entrepreneurs at Antler, very good tech scene here, and I think one of the major things that we could do here, specifically in the technology space, is build up university partnerships through CII. And this is something that India has already done in the past in terms of setting up our very first IIM Ahmedabad and AIMS hospital with foreign partnerships. And from there, we have been able to build the capacity internally itself. And IIT Madras, which comes from my own hometown, has set up a partnership university in Tanzania. And I think there are lessons there in terms of how technological capability can be transferred and also build local capability through these partnerships in technology. And more specifically, what CIA can do is host such delegations in India. There's one happening in December. December first week, we are doing it in 3 cities, and CIA is all the way supporting, I think, Kenya Investment Kenya in this endeavor. And another thing that is very interesting that keeps coming up in these conversations is we don't have to wait for offline delegations, right? We should do more online delegations is something that CIA can obviously catalyze. Another thing is how we can enable such dialogues with specific, industry-specific councils if we can set up and do, let's say, quarterly webinars on specific industry and then bring people from here online. And then maybe yearly once we can do an offline session here in Kenya and India as well, but that would be great. Another major thing that CA has going for itself is we have 12 centers of excellence that drive economic prosperity in India. So the 12 are split between manufacturing, trading, infrastructure, green energy, all of these spaces. And there's a lot of scope for institutions here to collaborate with our learnings there, because these have been running for decades now. And startups, green energy is a major space, and manufacturing technology and quality control is a major space that CA is already working in, and there could be a lot more sharing in these spaces.
All right, thank you so much. Well, ladies and gentlemen, you've had the example of how in the Indian side of things, we can really collaborate. I want to come local right here, and Caro, you're there. But just before Caro, you actually speak, I want to engage the audience, because the audience as well is flowing with it. And Zach, if you don't mind, I would appreciate my Poll Now app, especially on my comfort screen, because I want to ask you to go on your Slido right now and just help me on the engagement, if I could have it up there. Thank you so much for that. There's a poll that we want to ask you on. I'm just trying to move my slide. If you don't mind, you can move for me, Zach, manually, so that at least, just move it manually next, so that at least I can engage the people there. Just move on next. There you go. Aha. What is the most critical enabler in the private sector growth right now? Already, 12 of you already in there. Answer me that question, because I want Caro to pick from that point of view. What is the most critical enabler of private sector growth right now? If you're still on that slide, I'd appreciate if you can see what people are thinking. Is it access to affordable capital? Is it supportive policy? Is it strong value chain linkages? Is it skilled workforce? Is it tech adoption? Let's see what you think. So far, so good. 20 persons already. I know we are more than that, so feel free to ensure that we do that. Maybe, Caro, once we hit 30 persons, that would be a better sample. You could react on that. And as Caro, you're reacting to that, tell us how the Kenyan part, how you as the lead at the Kenya private sector, you're leveraging these partnerships with India, with the global industry to expand our capacities here. Go ahead. I think we have hit the number now. There, go ahead.
So thank you very much. So that's actually very relevant, and actually it really answers the question that we grapple with as we try to advocate for business and into government.
Yeah.
And it's true. I think what we're hearing from business, big and small, is capital. You know, the affordable capital seems to be a big one that cuts across. And many times I think you've heard us talking about and saying government is crowding out private sector in the banks, in the local banks. And because the banks then, if as long as government is offering bonds at good rates and treasury bills, then that's where the banks are putting their money, and then that stifles the private sector. And so it's a big question, and we really need to really tackle it. And I'm glad we're doing this with equity, because then if we can start looking at different, and I know equity has different mechanisms of supporting private sector, then other banks will come, because a lot of and especially startups, they end up looking for capital outside the country because they can't get affordable capital. But even SMEs, you know, really struggle with capital. So that's a big one. The second one, again, I think I really would like to agree. It's policy and regulation. I don't think policy is a big thing. Policy, we seem to have gotten the right policies. The regulatory environment remains a big challenge. And I know the panel before was tackling some of that. Because what we're seeing with the regulatory environment is that we still have too many regulators in the different sectors. I know, like tourism sector say that they have to get about 42 licenses to just operate. You know, that is impossible for businesses, and especially when we're talking about our majority of businesses, 80% of our businesses are SMEs. So if they're going to be able to grow and become bigger businesses or multinationals, they cannot with those kind of licenses. But the whole regulatory environment remains a big challenge. We've done a lot of work with KRA, with e-teams and ITAX and all that, but just the number of regulatory environment regulators in the market, but also even their conduct towards business. They don't see themselves as facilitators of business. They see themselves as policing business and making it very hard for business. And that's a big challenge for us. And those are some things we could learn from India. One of the programs that would really like, especially for our small businesses, we started the conversations with our High Commissioner of India here, but she's left, and I hope we can pick it with a new one. It was on Startup India. It's a really, really great program, especially for SMEs and startups. And we want to learn from what India has done and how they've been able to grow their startups. And when we look at our numbers, the ones that are, the only startups that seem to be able to get capital in our market are those that are already maybe second tier. They are not beginning. A lot of the ones that are beginning have to look for capital out because then no one has the appetite to support them. And so we need to find ways to be able to support a lot of our innovation, thinking about Kenya being a leader in the innovation space, in the technology space. But the third one, again from the statistics, is tech. You really cannot move without tech. And I think for me, when I think about India and their food tech companies, and that would really be useful for us right here, and especially for SMEs, because what we see with our export, we are leading global leaders on tea, coffee, horticulture, but very little retail value is left in this country. We export bulk. And so if we were to work with like India, and my counterpart from I forget the initial, the CIA, but we work very closely, is really working with their food tech companies and really starting to help our own companies be able to package, and their packaging companies, to be able to package, to add value, and so that what is here is branded in Kenya and be able to sell both locally, regionally, and globally what is Kenyan, branded and packaged in Kenya. So that's one of the partnerships that I really would be very useful to work with India. The second one that I would like to mention, and I can go on and on, but I'll stop in the second one, is the pharmaceuticals. We produce about 30% of all our pharmaceutical needs in the country. We could increase this because India has been a leader, a global leader in this area. And so this whole idea of co-creation, we're also learning there are certain diseases in our region that need different types of medication, different types of treatment because of the environment we live in. And so instead of just bringing in what we are importing from other regions in the West and other places, we can co-create for our region what is good for us and what will be useful for us. So that co-creation, I think, is very, very important if we worked with countries like India that are already ahead, but also producing just beyond just co-creating, just joint ventures between that, and then also attracting some of the Indian companies to come and produce here, and so be able to create the jobs in the world that we need. So I'll just to mention a few.
I know there could be more. Thanks, Carol, for that. I want to bring in some real example from BASF, but just before I bring you in, allow me to remind the room. We're talking about Kenya's competitive edge here, and the lessons you can pick from here, what you can take out, and even the questions that you may want answered if, for example, you want to set up. So it is important that you interact with these people because they have the experience on what it takes to set up here for you in this country. So please feel free to indulge with them. Remember our Q&A. To make it easier for me as well, if you can see the person speaking, you have a specific question to the person, you could write, Carol, this is my question, so that we can engage more. I would like to have more of the questions answered in this particular session. Thank you so much for that. So let me come to you, Martin. BASF is probably what we can say is the best example to look at, and you have been playing in the global leader when it comes to applying technologies to optimize manufacturing, enhance efficiencies, and the likes. So from your experience, how can Kenya's industrial sector leverage these tools that you have, and you can mention them by yourself, to raise that productivity, improve product quality, and strengthen competitiveness in regional and global markets?
Yeah. Thank you. Yes, that's exactly what BASF is known for. Today, digital tools is not an option. They are the active ingredients or fertilizers that spark growth in businesses. Before I bring the Kenyan context on what we do with digital tools and technology, let me take the team back to what our global innovators do, especially in Europe. We have a tool called BASF Zavio. Zavio is a total 100% AI generated with real-time data, and its job is 100% to help the farmer with smart decisions. smart decisions that are predictive to disease control or disease pressure, and smart decisions that also informs the farmer on the applications of pesticides and also predicts yields. Now, what we have done as BSF in countries like Japan, for example, we have deployed this BSF Zavio digital solution in rice farming for what we call dry direct seeding. Like all of you know that rice farming is done via nursery and then transplanting, and then you do a flash in the seed bed, and then you flash out the water. Now, this technology has enabled Japanese rice farmer to do dry direct seeding of rice. And this has reduced, for example, methane emissions by over 80% in the rice fields. And the labor in rice fields has also drastically reduced, meaning that the crop yield has gone up and productivity is also optimal. And the overall inputs to the rice farmer in Japan has gone down tremendously. The same is also in Italy, where our tomato farmers have reduced input of water in tomato fields by over 40% by applying the Zavio digital technology. In the African context, we have done models in Ethiopia for crops and pests control so that we localize the tool to accommodate local climatic environment and ecosystem. And the process is still ongoing. But now if you bring that context and transfer it to Kenya, where our potato, for example, farmers, and by the way, the Zavio in Japan has worked with 97% precision in predictive aspects of disease control. So if you bring that to Nyandarua, for example, which is the bedrock of our potato farmer, to help them predict late blight in potato early enough before onset of the disease, then you can see how much thousands or hundreds of thousands, or if not millions, if irrigated, that our farmers will be able to save when we transfer those technologies to the local scenario. Our major export crops, like Carol has indicated, coffee, tea, horticulture, ornamentals, flowers, and so on. If we transfer this to those crops, then the disease pressures that are very prevalent in coffee will come down drastically. The coffee farmer, smallholder farmer, will for sure double their productivity, and what that will mean that export turnover will increase from the current $5 billion USD on those 3 crops to double or triple. And these are the technologies that we can, BSF transfers to the local environment, local ecosystem. They are expensive and they need financing, and looking at the team that we have here, engineered by Equity Bank, I think we can start small by mobile-based scouting apps. And the team that was here before also talked about startups, many of them from Kenya. They can be helped to in financing and developing these apps so that we're able to scale them to our local farmers. By this guarantee, the SME aggregators in agro solution space or in agro processing, for example, aggregators, processors, and packaging companies in this space will also have reliable business cycle because they are sure of upstream flow of their produce.
All right, thank you so much for that. Ladies and gentlemen, I value the questions that you're asking. I only request that if you can try to stick to English. I've seen someone asking me in Italian. I don't have the ability so far, so please, if you can try to stick to English. But I'm trying to get a translation. In the meantime, though, when you look through the questions on the Slido, you can help us know the most important question by voting. At the end, there's a thumbs up. If you feel there's an important question that needs to be answered, please vote for me to help me. Brent, there's a bit of a touch on SMEs and integration. And Equity, the other day, actually, we were celebrating, they won the bank that really touches on SMEs, especially on SME lending. And I wanted to ask you, do you have certain instruments or risk-sharing models or capacity building initiatives that are enabling SMEs integrate into the large value chains? Is there anything you can share around that, please?
So as Equity Group, we look at how we connect the micro, small, medium-sized businesses in a number of ways. So at the end of the day, us as a commercial bank, we are taking risk as we intermediate resources in the economy. That is the reason why we have a foundation. So our risk assessment starts with de-risking initiatives or capacity building, more importantly. So our foundation does a lot of entrepreneurship training, financial literacy. So this helps to capacitate. What we also do, and it speaks to why we have these trade missions, we do a lot of connection of the value chain. When we capacitate, and capacitation is not just entrepreneurship, financial literacy, we are also doing technical capacity building with some partners where we have large commercial farmers that provide agronomical training. So that reduces production risk. What we also do through these connections where we help, for instance, the manufacturers source from farmers, and we help grow the outgrowers schemes of, let's say, a brewery. When there is an offtake agreement that is put in place, that helps reduce credit risk as well. So when we capacitate, it reduces production risk. When we connect, it reduces credit risk. Now, there is also other tools that we have, whether it's risk-sharing facilities, where we collaborate with the development finance institutions. We also have instruments called first loss guarantees. And then we also, generally as a commercial bank, we have collateral. Now, we combine all of this to make a more affordable, more reasonable, more practical package to a micro, small, medium-sized business. What we also do is, at the end of the day, what happens more often than not is a customer is viewed risky, not because necessarily of the business itself. The risk often happens when the whole value chain or there's a market structure issue, which more often than not is the case in Africa. Because of the fragmentation, there is elements of distortion in the markets. So beyond just the financing, there are structural issues that needs to be resolved, whether it's capacitation of micro, small businesses, whether it's connecting of these businesses into value chains, whether it's regulatory challenges, licensing issues. There is a whole myriad of issues beyond just the pricing of the individual business that one needs to consider. And these are ultimately the structural challenges that Equity Group is looking to help resolve, either as Equity Group, the institution, or we bring in multiple partners. We host forums like this where we can discuss the fundamental issues that is constraining or not allowing us to realize this opportunity that we keep on talking about.
Okay.
So that's maybe where I want to put the conversation.
Excellent. Carol, I think you could pick up on that. And don't look at the questions yet. Just let's first of all stick to this one line on policy. You've had Brent talking about how we can integrate market linkages. We still look like we are own enemies because I think movement within Africa, even after your launch of the Africa Free Continental Trade Area, all those kind of things, we seem to be quite slow into it. And we want people to invest and grow into this. What would you shed some light on what we can do just to enhance this competitiveness?
It's true, but as you know, even with before the EU moved, it took many years, but we don't have to take the same years the EU took because then there are lessons learned. Yeah. And I think with ACFTA, we can move faster. We've started seeing some movement, even from Kenyan companies, from tea and others. But I think the challenges that we face are really non-tariff. We just have these boundaries we've created around ourselves that make it very hard. But also our regulators don't speak to each other. So while we may have this agreement, you find by the time you cross the border, the regulator on the other side is asking for totally different documents than what you're supposed to have and all that. So I think what we need to first is harmonize our regulators, across the region, across the continent, so that they're speaking one language, they are understanding that we are all trying to do this together. And then secondly, even communication. I think our communication is still very outward because it's our communication, our infrastructure is very outward because our traditional trade routes were all facing out to Europe and others. So we don't connect very well. And so if the things we are trying to address through ACFT, and we are having several meetings together as businesses and with government, is apart from the regulators speaking to each other, secondly is our communication and infrastructure, speaking to one another and developing it towards and into Africa, not just facing out. The third thing, and when I talk about communication, is even telecommunication. Just being able to be able to communicate much cheaper. If today you tried, let me use Morocco, one of my favorite countries in Africa. If you try to make a call to Kenya when you're in Morocco, you pay an arm and a leg. If we can't communicate, we won't be able to trade. If I have to go to Morocco today, I have to go to Middle East or to Europe to go to Morocco. That won't improve our trade. We can't keep exporting our flowers to go to Europe, then to Morocco. And I'm using Morocco just as an example of the complexities. Today going to Malawi, Kenya Airways, because it has reduced its fleet, you have one flight every other day. And so if you're a Kenyan who is doing business, you better go to Ethiopia, to Addis, spend 6 hours, then go down to Malawi. We can't do business that way. So those are some of the things that we must address. I think the banking sector, the finance sector has moved much faster. There's a lot of cooperation between banks across the region, and so that should start helping on that side. We're seeing our banks into the region, and Equity, I think, is leading the pack on that. And so what the finance sector is doing, if we follow on the telecommunication, if we follow on the infrastructure side and the transportation side, then we'll start, and then the regulators speaking to each other and the policies, I think we'll start breaking those barriers much faster.
All right. And we certainly hope so. My panelists, please allow me to come to the people because there are questions coming up here, and I know we had planned to ask as many questions, but in terms of my script, but let me just first of all get to what the people are saying. Luck, I don't think you're lucky today. There's a very tough question here. Unilever, please shed light on how you're supporting your farmers on matters regenerative agriculture. 30 seconds, sir.
Yes. Nice question, actually, but not that tough. Huh? So as we said, one of the decisions we made was to try to bring as much of the communities where we operate into our value chain. So we are very intentional about targeting the smallholder farmer. So where Unilever actually comes in terms of supporting, number one, guaranteeing market at premium rates. So the rates that the farmers who deal with Njoro farming get versus what they get from the market is different. And we know that we are paying premium, but it's still more affordable versus importing the product. That is one, so guaranteeing market. But part of the obligation that Njoro Canning has is to deploy regenerative agricultural practices. They provide financial support to the farmers. They give outreach program, so they educate the farmers on the practices to apply. And they have, for example, their team who go out and engage the farmers throughout that process. Within the organization, I have one person whose job it is actually to go out and track and monitor and ensure that whatever we signed up to are actually being implemented in all of that. So at the end of the day, really, the biggest element is the fact that by us paying above normal market rates, we're actually attracting farmers who are actually getting more and more professional. So if you go within the Greater Njoro area, but also around Masinga Dam in Eastern Province as well, We also have a group of farmers in that space, for example.
All right, that's a good one. I'll come back to some of the tougher questions. That's why I said you are not lucky. But let me come to Carol. Carol, and I think even as you answer this, we may get as well a feel from how India is dealing with this. Carol, this is specific. I attended the launch of the first locally built electric vehicle in Kenya. He couldn't get local financiers. Where are the venture capitalists?
A very good question, and I think I'll answer it in two parts on what I think we should do. We do have our, so we have our pension funds of about 1.7 trillion Kenya shillings. If we just amended the regulation, and only 1%, which would be 17 billion Kenya shillings, was put into these early innovations, it would make a big difference. It would be actually more money than it would be 3 times the amount of money that has come in the last 3 years in venture capitalists. That's one thing that I think could be done. Another one, we are in discussions with government, very advanced discussions on a Kenya Innovation Fund of about $100 million. And the idea is that if this was to work, they would take the first loss, where they can put money into the startups that are beginning, and that allows the venture capitalists then to come in. Because we've seen, because of the environment, the venture capitalists and equity funds won't go into the startups as they are, but they come at the second level. So those are some of the two things that I think we could address in this question.
All right, thank you so much for that. One of the highest voted questions is about cost, that the cost of borrowing is high and it doesn't support SMEs. And I would like Kaushal, what are you doing at CII, at the Confederation of Indian Industry? What can we learn so that our costs as well can go down? And I know this Water Equity Group is doing, but what lessons, what can you say, guys, pay attention to this so that we can lower the cost?
Yes. So one of the things I loved about what Brent was talking about that Equity Bank is already doing, and which Purnata specifically, along with CII and some of the biggest banks in India that we are trying to do, is there's not just a gap in credit, it's also about availability of credit is one part. The other part is absorption of credit. Are they credit worthy? Are they credit ready? Can they absorb the credit in their books? Are the books properly maintained? Do the entrepreneurs truly understand their financial statements and its impact on the business and their borrowings, right? And most importantly, their cash flows itself. So this is the ounce on the SME owner themselves, right? What banks could do here is obviously education, but also get to some level of creative funding of supply chain financing is something that the Indian government has by far pushed through public sector banks, and loan guarantee schemes seem to work a lot because we have something called the loan guarantee scheme, both by the state and the national governments in India guarantee the loans given by the banks, and this has increased the credit availability in the system and provided credit to otherwise non-bankable people. The other part that I also see is the role of NBFCs, right? Non-banking financial corporations who are able to lend to people who are not bankable yet, but help them create documentation that maybe 3 years down the line help them get into the more formalized sector where the interest rates are much lower.
Awesome. Thank you so much for that. Martin, on the SMEs part, most want as well to integrate and to ensure that they have that value addition on your systems. Advise them. What should they do?
Thank you. SMEs is for sure the drivers of our economy, contributing almost 80% in their own space and employing over 40% of the total workforce. I think partnership is how I'll start approaching it. Partnership with the enablers in the various functions. Like, for example, in BSF, we have helped SMEs to develop centers of excellence, especially in agriculture space. We have partnered with, for example, women in coffee. I know coffee is a big foreign earner in this country. We've partnered with women in coffee in Trans Nzoia, for example. and we have helped them to set up a center of excellence, taking them through integrated crop management, crop nutrition, best practices, training of the local coffee farmers that also come there. We have helped them to establish mills, a mill for the coffee, laboratories for certifications. We have also helped them with the pulping unit. And this partnership, the intention is to help raise the level of forward integration for these SMEs to the level where their produce is accepted in the export market. We take them through quality parameters that the export market would like to ensure that their coffee has, including safe use, including certifications. And certifications is key, and this is also where partners here like Equity Bank can come. Right now, the regulation from EU, we call it EUDR, EU regulations on deforestation, for example, where a coffee farmer must ensure that the farm is geo-mapped to ensure that the farm is not as a result of trees that were cut, and this has to be done with real coordinates. It's an expensive exercise to get that certification. We really need to help farmers, of course, if they are able to come together in a accredited form, to finance them, as for example, Equity, in partnership with the BSF and players in the space. By this, they are able to make their own brand, and they are able to get highest returns from their produce. And the level of livelihoods that these smallholder farmers touch in their families is very high. This is what they use to pay school fees for their children. As you know, coffee farming is a smallholder farming. So this is how we, as BSF, try to uplift SMEs and grow them.
Thank you so much.
Thanks.
My panelists, this last part is what I call a quick fire. You take more than 10 seconds to answer it, you're out of order. All right? So just hold your mic because it might just land on you. Oh gosh, everybody's asking. Lak, I'm starting with you. Lak, what criteria do you use to pick your suppliers?
So it depends on what it is.
Okay.
But everybody goes through the procurement function.
So there's a procurement function.
Yeah, normally we would advertise
Okay.
when we are looking for services.
Yeah.
Everything goes through procurement function.
Well done. Yeah. Thank you, Lak. There's another one that was written because it was too long. For you, Lak, still, what challenges do you face as Unilever when it comes to competing with imported brands?
Oh, it's a big one.
It's a big one, but
I can't answer it in 10 seconds.
I'll give you 5 more.
Okay. That's actually our biggest challenge in the market. So if you look at Kenya, really, it's about Kenya's competitiveness. In the world that we are in right now, one can produce in China, in Egypt, in South Africa, wherever, and still be able to bring products into Kenya and sell and be competitive. So that's a real challenge we have.
Okay.
The way in which we tackle it is we enhance our knowledge of the market. Mm-hmm. We are based here. We believe we understand the market a lot more. It is challenging, though, from a cost of production perspective. When we benchmark ourselves, for example, against other markets, for example, Egypt, we can't compete. Okay. And that's the one area. I know Invest Kenya mentioned the fact that, Kenya is a great place to be in. Yes, it is, and we believe it is, in terms of the access it gives us to quite a significant market base. But operating here, I can tell you for free, for example, a bar of soap will make 5% more margin producing from Egypt, bringing it and selling it here. Oh. Yeah. So it's really about creating an environment where, as a manufacturer, really, you can compete against everybody else in the world. Because we are not asking for protection. Yeah. We are just saying, let's have a bit of a fair environment to operate in.
That's a very good, important point. Carol, you speak to government. I see you saying hi to the president anyhow. What's happening? Why is Lak producing it cheaper in Egypt, not here, and it's for us? What needs to happen?
It's the inputs. We are in COMESA, so we are in the same region. But Egypt, when it comes to power, when it comes to their inputs, they are so much cheaper than we have here. And that's what adds cost for us. And that's what we must address, beginning from power costs to all the other inputs.
Okay.
And they provide incentives as well, eh?
They provide incentives to their farmers and all.
Okay. So, Kara, you have some work in those conversations, right?
We do.
Yes. Excellent. Brent, I think you also have some work there to finance. Brent, it's a question to Equity Bank. Do you provide export finance to SMEs, and how do you leverage external capital from other countries? 15 seconds.
Yes, we do, and we basically partner with the DFIs. We engage multilaterals in crowding in financing into Africa.
Okay, awesome. There's another one here, Brent. Does Equity Bank provide a comprehensive roadmap for its members on the journey as an entrepreneur, and what kinds of support does the bank provide? Maybe in brief.
So let me not give a story. Let me articulate what has happened. We are very well known for Wings to Fly. This is our high school program, and I'm talking about a health value chain now. Those kids went on to our tertiary programs, equity leadership programs. A number of them went to university and finished medicine. We pushed them into entrepreneurship. They have become the owners of 146 clinics that we have in Kenya and the DRC. Our economic engine, which is essentially the banking business, provided financing. Our insurance business provided policies for those going into those clinics. We don't just give a roadmap, we have helped execute that roadmap. So this is one clear example of how our three-engine model, our Marshall Plan for Africa, has been put into execution. So when we talk about this private sector-led development, this continuum of capital, this is not just theory that we're talking about. We have actually applied this, and more specifically in the health value chain in this case.
Awesome, thank you so much. The person who asked the question, I think in French, is what are the prospects for financial support for startups in the DRC? What are the prospects for financial support for startups in the DRC? You're there, so quick one.
So we're the second largest bank in the DRC. We have, the way we operate in Kenya, we have replicated across all our markets, including the DRC. So this ability to capacitate, connect, finance, we will do in DRC as well.
Very nice. BSF, I don't know what's happening here. Someone has decided to land this question on you. This week, one of our dailies exposed how cancer-causing chemicals are being used in the agricultural sector. Please comment, BSF. That's what they say.
Thank you. BSF, speaking specifically about BSF, we are an R&D company.
Yeah.
And we spend over 2 billion euros annually in our R&D processes. It takes us almost 15 years to come up with a molecule for solutions that are inherent in the markets. Mm-hmm. We are a fully compliant company.
Okay.
And we are compliant to the local regulators. It's the local regulators that set ethics, that set policy.
Okay.
And I think the question is ably at the desk of the regulators.
All right. Thank you so much. And I want to appreciate my panelists for that. I think some of them are comments. Some people are saying interest rates should be 8%. Brent, I know you don't have the power right now to lower them. Brent is not central bank, but we are together on that. I think we're trying to support you on that. Lack, I believe you support SMEs. They can come for capacity building. It's a yes or no?
Answer is yes.
Okay.
Yeah.
What about CII? Do you support SMEs as well? Do you? Yes. The answer is?
Sorry, yes.
Yes, so they can look for you.
Absolutely.
So if you're an SME and you need some support, how to land in there, thank you. I'm just trying to brush through these questions, and thank you so much for that. There's a lot of work Equity is doing on the PPPs. This is one of it. So please make sure that you go to their desk, ask yourself that question if you're there. I am sure that we have touched on all the questions. Ladies and gentlemen, I appreciate my partner with a clap. The only panelist that didn't obey my time span is Lack, so I am punishing you by asking you to come with a gift hamper to my house. Huh? Let's take a picture. Let's take a picture kindly, if you don't mind. Asante sana. We appreciate you for really answering these questions. And we're just going to close this session with a beautiful video of what I said Equity is doing as well in the other side, in the leather sector. So if the video can get ready, we should be taking that. Ready? Thank you so much. You may take your seats. Let's appreciate the panel one more time. Thank you so much. And just before you watch that video, can we get to know what the video is about in 30 seconds? Brent?
So we've been commenting about the leather value chain, and maybe this is just to illustrate how extensive our initiative is to make that connectivity of our markets to global supply chains. So over the last few years, we've been working with many stakeholders, so collaboration is very important, on essentially developing this potential of leather and positioning Kenya as a premium leather processing hub. So over the last few years, we've been engaging many stakeholders in Italy, private sector, including government. And what we will show you here today is essentially a video of one of the associations in Italy. It's essentially the Association of Leather Manufacturers of Equipment. So this is just a video from one of the executives from that association. So that is the background, and it's with the intention that we transfer skills, technology into Kenya for a mutually beneficial relationship where ultimately Kenya will export quality processed leather into Italy. So if they can play the video.
Today marks an important milestone in our journey towards achieving our Africa Recovery and Resilient Plan. This is the flagship plan for Equity Group in ensuring that there is private sector-led development for the African continent. In part of doing that, we use a value chain approach, and we've identified leather industry as one of those important value chains for Africa, and particularly Kenya, where we do have one of the largest herds of animals across the continent. So today we've entered into a memorandum of understanding between the National Association of Italian Manufacturers of Footwear, Leather and Tanning Technologies. This memorandum of understanding provides us with a framework under which Equity Group and the association will work jointly in ensuring that the equipment and technologies provided by the association members in country have been funded adequately by the bank. Will be able to provide all financial solutions. Those include credit lines, asset finance, leasing, or whatever option that will be most appropriate. What does it mean to our Kenyan businesses? We'll have the latest technologies to ensure that we are able to optimize on production of leather and tanning. Italy is a market that is well established in the area around leather and leather products. You would know the fashion industry in Italy. So Equity Group has been working very closely with the Kenyan government and also Italian private sector to achieve this.
Today, we announce an important step forward in the relation between Italy and Kenya, and between our respective leather value chain, a cooperation initiative to bring together our association, representing Italian manufacturer of footwear, leather goods, and tannery technology, and Equity Bank in a strategic alliance built on a common vision. For us, producers of specialized technology and machinery, it is a source of pride to place this competence at the service of a forward-looking cooperation that increase the potential of the Kenyan sector. On our side, and as an association, we reaffirm our fully commitment to this cooperation. The joint action we present today is more than a simple statement of intent. It marks the beginning of a cooperation built on trust, aimed at generating skills, opportunities and technological innovation with a positive effect on employment with a long-term framework of collaboration. I wish to thank Equity Bank for its vision and expertise during this process. and this shared commitment will be further formalized in a memorandum of understanding to support the Kenyan data sector in achieving a competitive presence in Africa and global markets.
Maybe minor, just before you proceed. So the expectation is that we will host a leather investment forum together with government next year, early next year, Q1, Joy. And it will be graced by His Excellency the President. We'll have the Italian delegation also coming, but ultimately it is a forum that will look at the entire leather value chain, everyone from the livestock farmer to the slaughterhouses, to the tanneries, leather goods manufacturers, including those off-takers like Italy that are interested. So this maybe just gives you further color on how Equity Group is looking at developing value chains. So we don't just have this initiative on leather. We have other extensive initiatives on coffee, on tea. We have a big initiative on tea around geographical indications where we're working with the French government and French institutions in putting that in place. We have a big initiative in coffee. So this just maybe gives you color that Equity is a partner to help you develop these opportunities and to scale up and commercialize these opportunities. Thank you.
All right, thank you so much, Brent. Let's appreciate him for that and even the work that they're doing as well. Ladies and gentlemen, allow me to just give you some sweet teaser of what to expect in the afternoon. That's why we're having a very nice early lunch, and you should all be back here and seated by 1:15. So that will be about, I hope, in 57 minutes of 18. Just that. So please go and enjoy and have a good time. In the afternoon session, once we are back here, we shall have our chief guest in the house. And of course, we shall have the power panel as well that will be happening. I just wanted to let you know a few of the members who will be here. We'll be having the Cabinet Secretary, Honorable Lee. Dr. James Mwangi himself will also be right here. The Right Honorable Lord Swire will also be right here as well. Mr. Ali Maiga as well will be here. So you don't want to miss that. I want to keep time on that. For lunch, as you exit, you'll be given a voucher, and the ushers will direct you where to go straight to the restaurant. Thank you so much. See you at 1:15 on the dot. Thank you. See you then.